Good morning, everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagod here. Now, before I start the discussion, if there is no issue with the sound, please give me a thumbs up. Okay, done. Right, let's start. So, we will continue with the banking and hopefully we'll finish the banking today along with questions. So, yesterday what we have discussed, right, in concept of banking, we discussed the idea of the lending rate regimes, right, how the lending rates are decided, etc., etc. Then we have discussed concept of insolvency and bankruptcy code, IBC. What is the importance of insolvency and bankruptcy code, right? It's basically going to help banking sector to get rid of the non-performing assets. And what are the non-performing assets? You have seen the classification of non-performing assets. NPAs are divided. Basically, if you borrow and repay the loan, that is a standard asset. But if you borrow and do not repay the loan, then basically after 90 days, we'll classify this as a non-performing asset. And in the NPAs, we have seen the classification as well. The classification is up to 1 year, right? Up to 1 year, that is for 12 months, we'll classify this as a substandard asset. After 12 months, up to 12 months, we'll classify this as the substandard asset. And after one year is over, that is more than 12 months, we'll classify this as a doubtful asset. And after 4 years are over, that is 1 plus 3, 4 years are over, we'll classify this as a loss-making asset. But between, let's say, the standard asset as well as the NPA, there is one more classification. We have discussed that classification as well. That is the classification of special mention account, SMA. SMA 0, SMA 1 and SMA 2. If there is an NPA, if at all there is an NPA, what is the issue then? Issue is that the banks will be incurring a lot of losses. The investor confidence in the banking sector will go down. A lot of these deposits, right, will be withdrawn from the banking sector, etc., etc. That will create a lot of chaos in the banking sector. That is a concern, right, in the banking sector whenever the NPAs are very high. And why do we have very high NPAs in India? We have discussed that as well. That is, the banks are giving loans to companies. Companies are unable to manufacture and either export in the international market because there's a slowdown in the international market, and they are not able to sell in the domestic market because again there is a concern over pandemic, right, or let's say there is a lower income, etc., etc. So because of that, then there is a concept of DRT, Debt Recovery Tribunal. We have set up DRTs. We expected that within 6 months the DRT will be resolving all these cases, but it has been seen that over a period of time, number of cases which are pending at DRTs have increased, which means the NPAs, the retail borrowers who have borrowed money, will continue to remain NPAs. Then governance issues, right? Many of the ministries not giving loans, etc., etc. Right? So I'm sorry, many of the ministries not giving approvals or basically stopping the construction or people going to the court, etc. All these are various aspects related to that. Done? Right, so then we started the discussion of cooperative banking in India. The idea of a cooperative banking. In case of cooperative banking, what we have discussed yesterday, the basics of cooperatives. Right, the basics of cooperatives. Cooperative is a group of at least 10 people. I hope you remember the definition. What is a cooperative? It's a group of at least 10 people who have come together to achieve a specific objective. For example, I said we have cooperatives in housing sector, milk sector, sugar sector, right, etc., etc. In addition to that, we were discussing the structure, right, of cooperative banking in India, right? Specifically, two structures are there. One in urban India, second one in rural India. In urban India, we divide them into scheduled, non-scheduled, right? That is those cooperatives which are registered under Schedule 2 of RBI Act, those which are not registered under the Schedule 2 of RBI Act. Right, and within this also, again, you can further divide them into those cooperatives which are there in one state and those cooperatives which are there in multiple states. And what is the importance of studying same state, or let's say single state or multi-state? Whenever you have a single state cooperative, it is registered with the state government. That is, state government means there is a registrar of cooperative societies. It is registered with that. And whenever you have a multi-state cooperative, The union government has a register of cooperative societies. It is registered with the union government. Then in case of rural cooperatives, there is two division based on the loans which are given for short term, medium term. We have a 3-tier structure, and based on long term loans given in agriculture sector, we have a 2-level or 2-tier structure. Right. So these are certain important points. Now let's go ahead. Let's pick it up from there. There is always a concern regarding the cooperative banks. There is a dual regulation. Remember this. There is a dual control or dual regulation as a concern regarding the cooperative banks. Now, what is this dual regulation? Look at the first point here. Look at the first point. In 1966, Government of India amended Banking Regulation Act of 1949. And what Government of India did was, all those cooperatives which have a paid up capital of at least 1 lakh rupees were brought under the regulation of RBI. What is a paid up capital? Paid up capital simply means how much is the contribution, how much is the money that is paid by shareholders. Is it okay? I'll repeat it again. How much is the money that is paid by shareholders? That is called as paid up capital. For example, I'll just give a simple example. Imagine tomorrow one company will conduct IPO, right? Initial public offering. Again, don't worry about what is initial public offering as of now. That is basically selling the shares to the investors. So when the company will sell the shares to you and you pay the money to purchase the share, that money that is collected, it is called as a paid up capital. Now apply the same logic to cooperative banks. I said 10 or more people will come together and they'll form a cooperative. Now you want the cooperative to start lending activity. You want the cooperative to start, let's say, procurement of milk and selling of the milk. You want the cooperative to purchase fertilizer and sell fertilizer. Now, don't you think the cooperative requires money for all of it? I hope you understand the logic is simple. Cooperative requires capital for it. So every member will contribute certain capital and form a cooperative like this. Now, whichever cooperative had a paid up capital of more than 1 lakh rupees were brought under regulation of Reserve Bank of India. And I hope remember earlier also we have discussed certain aspects related to Banking Regulation Act. Where it was discussed earlier? Very much in the first class of banking last week when I gave you the division within the banking sector. At the top of it we have Reserve Bank of India, and below that we have commercial banks. And I said all these commercial banks are regulated by RBI because they come under or they are covered under Banking Regulation Act of 1949. Now, despite bringing under the Reserve Bank of India, there was a problem of dual regulation. Now, follow this, slightly technical, follow this very carefully. What do you mean by dual regulation? Imagine here is a cooperative bank. Imagine here is a cooperative bank. The cooperative bank will perform two types of functions. One is, right, basically functions related to banking. One is function related to banking, and second one is administrative functions. Administrative functions. Sir, what do you mean by administrative functions? For example, allowing members to join the cooperative. Allowing the members to join cooperative. Right? Employment generation. Hiring people for operating in the cooperative bank, etc. And on the other hand, the same cooperative bank is also performing banking functions. What do you mean by banking functions here? Collection of deposits. Collection of deposits. Point number one. Opening new branches in different cities. Giving loans, etc. Understand this carefully. The cooperative bank is performing two types of functions here. One is related to banking. Second one is related to administrative, that is back end of the cooperative. Now, imagine a cooperative has 500 members. Imagine there's a cooperative and this cooperative has 500 members. Do you think all the 500 members can be involved in management operations of the cooperative bank? Think of it. How do you understand all of it? Just take an example, you will automatically understand. There are 500 people who are members of cooperative, right? Can you imagine all these 500 members daily coming to office deciding what should we do with deposits? What should we do with, let's say, number of people who are working, etc., etc.? That's not possible. That is the reason in cooperatives there is a management which is called as board of directors. Remember this. There is a structure within the cooperative which is called as a board of directors. And it is this board of directors which is elected. Be very careful. It is this board of directors which is elected by the members. I hope you understand this. The members in the cooperative will vote. Every member will have one vote. They will vote and they will elect the board of directors. And this board of directors will take care of the banking activities as well as administrative activities. Now here comes the problem. When the members are elected to board of directors, is there any guarantee that board of directors are experts in the banking sector? Let me know. When you elect members, right, I'm pretty sure you must have seen in many of these board of directors, politicians are there. A lot of politicians actually come from the board of directors at the national level itself. So the argument is simple here. The members will conduct elections, and the board of directors are elected. Now this board of directors will take care of the banking activity as well as administrative activities. What if these board of directors do not have any banking knowledge? What if they are not experts in banking? Then don't you think you are taking a risk by collecting the deposits of the people? You're taking a very high amount of risk. You're putting the people's money at risk here. Right? That is the precise reason why, understand this carefully, this is called as a dual regulation. Understand this. This is basically the dual regulation. What is the dual regulation here? Board of directors would basically be, right, taking care of administrative activities. But in case of the banking, understand this, in case of banking, Reserve Bank of India would regulate the cooperative bank. In case of the banking activity, RBI would regulate the cooperative bank. That is, again, the decision is taken by board of directors. But who will regulate the banking activities? RBI will regulate. What about this administrative side? What about the administrative side? Elections have to be conducted. Members have to be entered. Auditing of the cooperatives has to be conducted, etc., etc., etc. Who will take care of this administrative side? It will be the registrar of cooperative societies. I'll use a short form here. Right? Don't ask me what is RCS. Yesterday we have discussed this. Registrar of cooperative societies. Now, on one side, RBI regulates cooperative banks, and on the other side, RCS also regulates cooperative bank. Can I call this as a dual regulation? Let me know. Can I call this as a dual regulation or not? Dual regulation simply means two regulators. There are two regulators. So this is a problem. I hope you understand this is a problem. Why? Board of directors election is conducted by RCS, that is Register of Cooperative Societies. They may or may not be experts within banking sector, but they are taking the banking decisions. No doubt, right? RBI will regulate the banking activities, but who are taking the decisions related to the urban cooperative bank or a rural cooperative bank? It is a board of directors. And this has led to mismanagement. In many of the cases, this has led to corruption in the cooperative banks. This has led to wrong decision making in the cooperative banks, right? Wherein, right, board of directors have decided to give loans to certain people who are influential, who are relatives of politicians, who are businessmen connected politically, etc., etc., etc. In simple terms, mismanagement. Mismanagement of public funds. Right? The best example for this is Punjab Maharashtra Cooperative Bank, wherein Punjab Maharashtra Cooperative Bank gave a huge amount of loan to one business. And when that business incurred a loss, you have a lot of exposure towards only one, right, borrower. Don't you think the whole bank will also end up incurring losses? So that is the precise reason. What Government of India has done now is, it has amended. I've written the point here. Please have a look at this. I've written the points here. To address this particular issue, what Government of India has done is, it has further amended Banking Regulation Act. Come to the next point. It has further amended the Banking Regulation Act, and this amendment has come into force from 2020. The Banking Regulation Amendment Act of 2020 has been implemented now. What is the most important focus in the Banking Regulation Amendment Act? Now, these cooperative banks will be regulated by RBI. Understand this. More regulatory power will be given to the Reserve Bank of India compared to, let's say, the board of directors, because board of directors may or may not have the experience in the banking. Now, how is that RBI has been given more powers, right? Have a look at this. Now, these cooperative banks will have to set up one more authority within the cooperative structure. That is, let's say there is an urban cooperative bank. This urban cooperative bank now will have to have one more authority within the urban cooperative bank. We already have board of directors. Is it okay? We already have board of directors. But what is the problem with the board of directors? The board of directors are elected. These are elected. They may or may not have any experience in the banking. They are elected. So what we will have is, we will have one more authority within the cooperative bank, that is board of management. Is it okay? We will have one more component within the cooperative bank now, that is board of management. In short, BOM. Now, what is the role of the board of management? Board of management will basically get involved in the banking activities. Is it okay? I'll repeat it. The board of management will get involved, will oversee means will look into the banking activities of the cooperative bank. And you tell me, if you are asking a cooperative bank to set up one board of management, would you want those people to be experts in the banking sector or not? Simple question to all of you, right? Think of it. You are asking the urban cooperative bank, or let's say these cooperative banks, to set up one board of management. Would you want elections to be conducted here? Obviously, no. We do not want elections. Why? Politically influential people might get elected. But we have already board of directors. Why should we elect now? No elections. Second, would you want them to be experts or not? Again, the answer is yes. So have a look at this. There are 12 plus 1 members. Minimum 5, maximum 12 people. In addition to 12, there will also be a chairman, MD or CEO. This will oversee the banking activities. Sir, what do you mean by banking activities here? Collection of deposits, giving of loans, recovery of NPAs, non-performing assets, etc., etc., etc. Right? So these board of management will oversee the banking activities. Now, who is going to appoint these board of management? It is going to be the board of directors, which will appoint board of management. But here is a condition. RBI has to approve these appointments. Is it okay? RBI has to approve all of these appointments. Why? Imagine, I'll just take a simple example. I'm not, but let's say imagine I'm a very influential political person in a region. Okay, very influential. Right? Will I not, if given a choice, will I not want all my relatives to be part of board of directors? Of course, yes. And is that possible? And yes, it is possible. Why? Elections are conducted. It is very much possible. But in case of board of management, now I will have to take the approval of Reserve Bank of India. Approval of RBI. Now, RBI says, if you appoint someone into board of management and I feel that this person is not suited for the job, I will ask you to remove them. I'll simply ask you to remove them. I will not allow you to appoint these people. For example, who are allowed here? Those who have expertise in, let's say, retail banking. Those who are experts in agriculture credit. Those who are experts in, let's say, gold loan segment, etc., etc., etc. So again, the argument is very simple here. Board of directors will be there, But now it is the board of management, right, which will basically oversee the banking side of the urban cooperative banks. Right now, this is the power that has been given to RBI. In addition to this, Reserve Bank has been empowered to supersede the board of directors. Supersede means what? Overtake. Supersede simply means overtake the board of directors. And it is not just, understand this, it's not just associated with cooperative banks. Can I give you simple examples? Let me know, have you seen this or not? Yes Bank. In the context of Yes Bank, did RBI simply supersede the board of Yes Bank or not? Supersede means simply they will ask the board of directors not to take any decision. RBI will appoint one person. The person will start taking the decisions of the bank. Right? There is an appointment of administrator. Has it happened earlier also? Of course, in many of the banks, RBI has done it. Now, in case of cooperative bank also, this power will be given to RBI. So, RBI can simply supersede or overtake the management activities and ask the board of directors to go home. Next one, new act or the new provision will also allow the cooperative banks to go to the market, issue shares and raise capital. Have a look at this. Right, in the new provisions, now the cooperative bank can go to the market, of course with approval of RBI, go to the market, issue shares, issue bonds and raise the capital. Now simple question, having seen, right, I hope you are reading newspapers, having seen what has happened to Credit Suisse, having seen what has happened in the Silicon Valley Bank, don't you think one of the ways through which capital can be collected by the bank is basically through issue of shares and bonds? Let me know. One of the ways through which a capital can be pooled, capital can be collected by the banks is by issuing shares and bonds. That is exactly what that is what exactly the cooperative banks are allowed to do now. They can raise capital, go to the market, issue bonds, issue shares. Now the Reserve Bank of India is also empowered to prepare plans for the merger, right, or amalgamation of cooperative banks. That is, let's say a cooperative bank is there, it has incurred a huge amount of a loss. RBI can create a proposal, can create a plan where this cooperative bank will be merged with another plan. Now this plan has to be given to Government of India. Government, once it approves, this can be implemented. Okay, right, so these are certain very, very important changes that Government of India now has done by amending Banking Regulation Act, right, Banking Regulation Act of 1949 back in 2020, and has given more regulatory powers to Reserve Bank of India. Okay, right, so this is the discussion regarding cooperative banking. Let me go to the next concept here. Regional rural banks, RRBs, regional rural banks. Now, first and foremost, please understand the context here. I don't say, sir, why are we discussing RRB, etc., etc. Understand the context. RRBs as a model was proposed by Narasimham Committee. As a model was proposed by Narasimham Committee back in 1975. Back in 1975. Right, which means you'll have to go back, right, by more than 35 years back in the history now. Right, more than, right, in fact, 45 years or 47 years now. Do you think, right, let's say 45 years ago, right, let's say 45 years ago, do you think the banks were present in rural India as they are present today? Just think of it. Right, I hope you understand. Just think of it. Do you think as of today, right, today you are seeing there's a presence of banks in rural part. Do you think 45 to 50 years ago, same presence was there in a rural part of India? Absolutely no. Even today, right, remember this, even today, Government of India says all the villages in India do not have banks. I hope you understand this. Even today, Government of India itself says all the villages, we do not have banks. That's the reason one of the targets which has been set up by Government of India is we want to ensure that in a diameter, or let's say in the radius of 5 kilometers, for every village, we will have one bank. Is it okay? I'll repeat it again. In a radius of 5 kilometers of every village in India, we should have at least one bank. Even today, we are targeting that. And we are talking about 1970s, 1960s, right? So you can imagine what was the situation at that point of time. So regional rural banks as a model was proposed by Narsimham Committee. Why was it proposed? These are the reasons. One, rural part of India, lot of farmers dependent on agriculture. Even today, around 49% of working population is in agriculture sector. So rural population mainly dependent on agriculture sector. They find it very difficult to get loans from banks. They find it very, very difficult to get the loans from institutions. For one reason, these are not present in rural part of India. Right? If they are present, there are more problems. I'll tell you when I discuss agriculture sector. But first and foremost, these institutions are not there in a rural part of India. So one, we need to promote agriculture sector. What about smaller businesses which want to start operating in rural part of India? Small industries, let's say handicrafts, textile sector, related to agriculture sector, they also want loans. They also need credit. Do we have banking institutions in a rural part of India? Again, that's a problem. Now, some of you might be thinking, sir, what is the problem here? If they are not present, what will happen? Please understand this. Here is a farmer. Farmer can take loan from a bank. All of you will agree? Farmer can take loan from a bank. The same farmer can also take a loan from money lender. Same farmer also has an option of taking a loan from money lender. Imagine you are that farmer. You tell me, would you want to take a loan from a money lender or a bank? Just think of it. Right? Imagine you are the farmer. Put yourself in the shoes of the farmer and you tell me you want to take a loan from a bank or a money lender. You should choose bank. Right? I hope you understand. You should choose a bank. Why? Rate of interest is lesser. Right? Banks do not beat up a farmer if there is no repayment. Right? Etc. 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 But if you take a loan from a money lender, what will happen? Rate of interest, first and foremost, it's very, very high. Rate of interest is very, very high. I'll give you a data here. Please have a look at it. As per RBI report, in a rural part of India, whenever farmers or anybody takes a loan from these kind of intermediaries, that is money lender, rich people, etc., rate of interest is in the range of 24% to 36%. Rate of interest is in the range of 24% to 36%. So you can imagine what is the steep level of rate of interest paid by the farmer. So we want industries to get access to institutional credit. We want farmers, households to get access to institutional credit. We want a rural part of India, that is villages, to develop. But you tell me in 1970s, when you had private sector banks, do you think private sector banks will be focused on villages in India? We have discussed this, by the way. Do you think private sector banks will be focused on development of villages? Of course, no. They would be focused on cities. They feel it is better to have branches in cities. They can earn more amount of profits there. So in order to address all of this, back in 1975, there was a committee, Narsimham Committee, which recommended that we should have a model called as a regional rural bank. Now, before going forward, how these RRBs are different from, let's say, SBI? What is the use of it? You already have SBI. You already have Punjab National Bank. You already have many other banks. How is it going to be different? Remember this, regional rural banks, their activities will be limited to 1 or 2 districts. I hope you understand. Their activities, what do you mean by activities? Opening the branches, collection of deposits, giving the loans, etc., etc. The activities of the regional rural bank, RRB, will be limited to 1 or 2 districts. Now, do you think the same feature is applicable to SBI? Do you think the same thing is applicable to any private sector bank? The same feature is applicable to any other scheduled commercial bank? Of course, no. Of course, no, right? SBI cannot be limited to 1 or 2 districts, right? Cooperative banks, these are present in multiple states. I hope you understand this. So the argument was simple. We'll promote a new type of a banking wherein these will not be spreading throughout India. We will limit their spread to 1 or 2 districts. And if they are present in, let's say, 1 or 2 districts, they'll be more focused on, right, giving loans in only 1 district. They'll be more focused on collection of deposits in 1 district. They'll be more focused on giving loans to farmers, etc., etc., etc. Right, so that is basically the idea of a regional rural banks, RRB. Point number 2. Point number 3. Imagine your SBI. Government wants, right, RRBs to be set up. Will you be interested? Let me know. Right, you're a Punjab National Bank. You're a private sector bank. Government wants RRBs to be set up, but government says, if you set it up, I will not allow you to expand beyond 1 or 2 districts. You will have to be limited to 1 or 2 districts. Obviously, you will simply tell the government, sir, thank you, but no thank you, because you are asking me to limit my operations. My expenditure will be higher, but my revenue will be very limited. Why would I invest 1,000 crore rupees? Why would I invest 2,000 crore rupees? Thank you, but no thank you. That is a precise reason. Have a look at this. Government has introduced a novel model in case of RRB, a new model. What is the model here? Government said to these banks, you do not have to invest the money alone. The capital that is required to set up the bank, only you don't invest. Central government will invest. State government will also invest. So the capital that was invested, the capital structure, that is the ownership of the regional rural banks, was divided like this. The central government would invest 50%, the state government would invest 15%, and remaining 35% would come from a bank. Is it okay? Let me know if there is any issue. Right? Because the banks are concerned, government is asking me to operate in 1 or 2 districts. I'm not interested. My expenditure will be very high. Why should I spend so much amount of money? So government said, only you don't spend. When you want to set up the bank, you don't spend all the money. I will also give you certain amount of money, and the state will also give you certain amount of money. How much? Let's say for one bank, the capital requirement is 1,000 crore rupees. Out of this, 500 crore will be given by the center, right? 500 crore given by the center, 150 crore given by the state, and remaining 350 crore would be brought by the bank itself. And because the bank, either a private sector or a public sector, doesn't matter, because the bank is investing money in this, this would be referring to as a sponsoring bank. This would be referred to as a sponsoring bank. All of you heard of the term sponsors? Let me know. All of you have heard of the term sponsors or not? IPL is going to start now. WPL is happening. Are they sponsored to these or not? What do you mean by sponsors? The one who are spending money, the one who are giving money. So the bank which provided this 35% would be referred to as a sponsoring bank. Now I've given certain examples here. I'll come back to this, don't worry. I've given certain examples. As expected, many of you are asking, sir, any example of a RRB? Do not by heart it. It is just an illustrative list. I've given you examples of 10 RRBs. Have a look at it. Do not by heart. Trust me, do not by heart it. UPSC will not ask you examples because there are around 40 plus RRBs in India. 40 plus RRBs in India. Can you remember all the 40? And I'm not challenging you. That many of you early morning will misunderstand my question and say, are you challenging me? So let me sit throughout the day. Let me sit today, right, on the auspicious day of Ugadi. I'll have a tilak and I'll start mugging up all the 43. Not needed. UPSC will not ask you all of this. Don't worry. So this is example of RRBs, right? And any sponsor banks. Any example of a sponsor bank? Have a look at this. Here SBI as a sponsor bank, right, has invested in some of these banks here. Here Punjab National Bank, right, PNB is also a sponsor bank for some of these RRBs. Any problem with the idea of RRB? Please do let me know. Any problem with the concept of RRB? Right, idea is very simple. We wanted rural economy to grow, rural industries, rural businesses should get access to loans, farmers should get access to loans, etc., etc., etc. That's the reason we proposed and we limited the role of RRBs to 1 or 2 districts. Okay, so central government will invest 50%, state government 15%, and any bank which is called as a sponsoring bank 35%. And ownership is also in the same way. If you ask me, sir, how much is the ownership of the center? You tell me, if you are the central government, you have invested half of the capital in a bank. Does it not mean you own half of it? I hope you understand this. Does it not mean you own half of it? State government has invested 15%. Does it not mean state owns 15%? Etc. like this. Okay. Now, what are the features? What are the features of RRBs? 1. The role of RRBs will be limited to 1 or 2 districts. Second, look at the second very important point. We have discussed earlier the concept of PSL. Sir, when? Tell me. You have not discussed. Tell me where you have discussed. Right? When we discussed monetary policy, priority sector lending. And I said, priority sector lending generally is kept at 40%. PSL is kept at 40%. Is it the same for all the banks in India? Right? Of course, no. For regional rural banks, priority sector lending is 75%. Is it okay? Priority sector lending is 75%. And I hope you understand what is the utility of the PSL now. What is covered under the PSL? MSME, farming community, weaker sections of the society, housing sector, agriculture sector, student loans, etc., etc. So PSL has been kept at 75%. And third very important feature is the sponsoring bank will oversee the administration of the RRBs. The sponsoring bank will oversee the administration of the bank. What do you mean by oversee the administration? Whoever is the chairman of a sponsoring bank, whoever is the chairman of an RRB, it is appointed, the person is appointed by the sponsoring bank. Is it okay? Right, the chairman of an RRB, the appointment is done by a sponsoring bank. For example, in this case, right, let's say SBI. SBI has sponsored Gramin Vikas Bank. Now the chairman of Gramin Vikas Bank will be appointed by whom? State Bank of India. Right, the Punjab National Bank has sponsored Sarva Haryana Gramina Bank. Chairman of this Gramina Bank is appointed by whom? Punjab National Bank. So important personnel who are required to manage the RRB, appointment will be done by the sponsoring bank itself. That is a power that has been given to sponsoring bank. Okay. So this is a discussion regarding RRBs. Now what has been the concerns related to RRBs in recent times? What has happened in the RRBs? Just like any other bank, the non-performing assets in RRBs have increased. Is it a problem or not? Let me know. Just like any other bank, the non-performing assets in the RRBs have increased. That has led to lot of losses in the RRBs. Lot of these RRBs have incurred losses. Problem 1. Second problem, right? The mobilization, that is number of accounts which have opened, right? The number of the deposits which are there with the RRBs, the value of money that is collected by the RRBs under these deposits has slowed down. And that's very important, because one of the ways that the banks, any bank for that matter, one of the ways through which a bank will be able to lend in the market is by collecting deposits. Any issue with this? By collecting deposits, the bank will be able to lend in the market. What if I say the number of deposits collected by the bank has taken a hit, has come down? You might be asking me, sir, why the deposits are coming down? Let me ask you a counter question. Imagine in your locality, there is one branch of SBI and there is one RRB. You tell me where you are more likely to put your deposits. Is it okay? Right? Where do you think you are more likely to keep your deposits? It is more likely that you will keep the deposits in the SBI itself. Right? Again, don't say, sir, where SBI is present in every locality. No. Can I simply say the presence of other commercial banks has increased in recent times? Is the logic okay? The presence, the spread of commercial banks in recent times has actually increased. And that has led to more and more mobilization of the deposits within the banking sector, within these types of banks. And in fact, remember this. This is a point I'm just going out of the way and telling you a current affairs point. If anybody will ask you, may not be today, but let's say in the UPSC interview or somewhere like this, an event such as Silicon Valley Bank, can it happen in India? Right? Event such as Silicon Valley Bank, there is a Silicon Valley Bank issue. Can it happen in India? How Indian banks are different compared to the banks in USA or let's say, right, UK? One of the very important point of difference that you will have to tell is, in Western banks, large chunk of deposits are because of corporates. Understand this. I'll repeat it again. In Western banks, a large chunk of deposits is because of corporates. These are generally referred to as wholesale deposits. Wholesale deposits. What do you mean by wholesale? Simple. The amount of deposits are very, very high. Whereas in case of India, majority of the deposits that we have collected, that is in the banking sector, these are retail deposits. These are retail deposits. Now, don't you see there's fundamentally a lot of difference between the banks in America as well as banks in India? I hope you understand my point here. There's a fundamental difference between how the banks in America collect a deposit and how the banks in India collect deposits. Right? In case of America, these are wholesale deposits. That is, either the amount will be deposited in large quantity and the company will withdraw in large quantity. What about in India? How many of you will run to the bank today, withdraw all the amount of money that you have in deposits? Think of it. Think of it. Right? Look at your parents. How many of you have seen, despite SVB crashing, despite a problem with a Yes Bank, how many of us ran to our respective banks, whatever bank it is? How many of us ran to our respective banks, withdrew all of our money? No. Right? That's an advantage for Indian banking system. I hope you understand. That is what is working in favor of Indian banking system. If we are companies, if we are corporates, if something happens in, let's say, one bank, we are concerned, we'll start withdrawing money. But in case of India, most of the deposits are in the form of retail deposits. And the retail investors will continue to keep money in the banks, irrespective of a crash in Yes Bank or a problem with a PMC, etc., etc. We will continue to keep the money. Why? You tell me what is the other alternative. Let me know. You tell me you have kept, let's say, 2 lakh rupees or 10 lakh rupees in a bank deposit. You tell me what is the other alternative that you have. Right? Would you want to invest in stock market? Aren't you taking more risk by investing in the stock market? And moreover, do you have the knowledge of stock market in the first place? Sir, I will invest in mutual funds. Good. Some of the investors are moving towards mutual funds now. But again, people don't invest all their money in mutual funds. So that's a very much fundamental difference between a bank in USA and bank in India. Please remember this. Right? Will the same event take place in India? Very unlikely. Very much unlikely. Why? The structure of bank is different. right? The structure of bank is very much different in India. Okay, come back to this. So have a look at this. The deposit collection has been very slow. On the other side, the NPAs which have incurred in these RRBs are very high, and this has basically led to a lot of losses in the RRBs. And in addition to this, one more problem related to these RRBs has been that no doubt they are supposed to be limited, their operations are supposed to be limited in 1 or 2 districts. But what if within the 2 districts you open up large number of branches? Is it okay? I hope you understand the problem here. On one side, you are not able to collect deposits. Your NPAs are very high, losses are happening. In addition to this, what if within the 2 districts itself, you open up large number of branches? The expenses incurred by the RRBs will skyrocket. The expenditures will also be very, very high, right? So these are some of the problems, some of the concerns or issues related to RRBs. Done? Right? So that is a precise reason 2 reforms are being implemented by the government. 2 reforms. 1, now RRBs have been allowed to list in the stock market. I hope you understand my statement here. RRBs, regional rural banks, have been allowed by the government to get listed in the stock market. You tell me, what is the advantage? If you get listed in the stock market, will the capital of RRB increase or not? Simple question. Will the capital of RRB increase or not? Of course, yes. And second reform is, there is a merger that is being done by the government of India in case of RRBs. RRBs, right, have been merged now. For example, I said as of now, there are around 40 RRBs, right? Exact number as per Ministry of Finance website is 43 RRBs. But if you look at the number of RRBs, let's say in the beginning of 2000, there were more than 100 RRBs in India. More than 100 RRBs. So over a period of time, what government of India is doing? They are merging these RRBs so that, right, the number of RRBs will come down and they'll be able to consolidate their operations, improve their costing. Right? So these kind of reforms are being implemented by the government. Please be very, very careful. Done? Any issue with RRBs now? Can I go to the next one? Any issues with RRBs? Done. Okay. Okay, now before I go forward, despite RBI regulations, how NPAs are increasing? You tell me, RRBs are targeting companies or farmers? Simple question. RRBs are targeting companies or farmers mainly to give loans. Farmers, small businesses, villages. Any guarantee how much income a farmer earns in 1 year? Anybody in the class who says a farmer, you will have a methodology to tell what is the income earned by the farmer. Can I give you a current affairs example? Let me know. What about a farmer who has cultivated onion in the last 2 months? What about the farmer who has cultivated potato in the last 2 months? Right? So understand this. There are a lot of issues in the agriculture sector, a lot of problems. Right? So farmer takes a loan. Right? There is no guarantee how much income they are going to earn. Right? So if they borrow money from an RRB and an event such as what has happened in the last 2 months takes place, don't you think the farmer will default on the payment? Farmer will simply not make the repayment. Right? That account becomes an NPA, non-performing asset. Okay. Now come back to this. Earlier when we were discussing something related to infrastructure, right, have I told you the fact that infrastructure requires large value loans? I've told you this. You should remember this. Sir, where did you tell about all of this? Merger of banks. Merger of banks. So large value loans, right? What do you mean by large value loans? Not a small value, let's say 1,000 crore rupees, 2,000 crore, 6,000 crore, etc. And the loans which are issued for infrastructure should be of longer duration. Should be of longer duration. Any problem with this? Let me know. Now there is an issue in the banking sector which is called as asset liability mismanagement. Asset liability mismanagement. Understand this carefully. Now what do you mean by asset liability mismatch, not mismanagement, mismatch. Asset liability mismatch. Now what is this asset liability mismatch? Let's start. Here is a bank. The bank has collected a deposit, let's say a fixed deposit, right? What will be the duration? Let's say 3 years. Done. So bank has collected a fixed deposit whose duration is 3 years. Let's say value is 100 rupees. And let's assume there is no CRR, there is no SLR. Let's assume that. What this bank will do is, it will give loan for a road developer now. Same 100 rupee, it will use it and give a loan to a road developer. How much? 100 rupees. Now, road developer will take the loan for 10 years. Done? Sir, why road developer will take a loan for 10 years? Of course, the road developer wants to develop road. It cannot be done. It cannot be done, right, in 2 months. It cannot be done in 5 months. It will take multiple years. Now, please look at it. Look at the situation here. Step 1, bank has collected 100 rupee for how many years? 3 years. Step 2, bank has given the same 100 rupee as a loan, but it will collect the amount in how many years? 10 years. Right? Is it okay if I say that the tenure of the loans on both the sides are different? The term or tenure. On one side, the deposit has a tenure of 3 years, and on the other side, the loan has a tenure of 10 years. This is called as asset liability mismatch. This is referred to as asset liability mismatch. ALM. Asset is the loan, liability for the bank is a deposit. The tenure of both of them are different. This is called as asset liability mismatch. Any difficulty in understanding this? And is it a problem? Of course, yes, it's a problem. Let me give you an example. Let me elaborate this. Right? Imagine you are that investor. After 3 years, you will come to me. I'm a bank. You will come to me, ask for 100 rupees. Ask for 100 rupees. Now, do I have your 100 rupees? Think of it. Do I have your 100 rupees? No, I've given it to a road developer. Now, first thing, can I simply say, if you come to the bank after 3 years and ask it, there will be pressure on the capital that is available with the bank? Rather than using the term capital, can I use the term liquidity? Can I use the term liquidity here? There is going to be a pressure on liquidity held by the bank. Any difficulty here? Please do let me know. Second problem here is, you have given me 100 rupees. Let's say rate of interest is 5%. Right? Let's say the rate of interest is 5%. Now you have come to me after 3 years, and you want the 100 rupee back. So first, it will put a pressure on liquidity, that is money that is available for the bank. Second, I will pay the 100 rupees. Don't worry, I'll pay the 100 rupees. But how? Let's say on the day when you come, I will take one more deposit from the customer of 100 rupee, and I will use this 100 rupee to give you back. This is how the banks will work. I will use that 100 rupee to give your 100 rupee back. But look at the next problem here. When I took 100 rupee from you, the deposit rate was 5%. What if now the deposit rate is 6%? Possible? Let me know, is it possible or not? What if I take this 100 rupee, offer 6% rate of interest? Will it not put more burden of rate of interest on the bank? Right? So there are two problems. There are two problems that the banks will face because of asset liability mismatch. One is, it puts a lot of pressure on the liquidity position of the bank. Second one is the interest rate. The interest rate burden can also be imposed on the bank, because now What if the deposits have become more costly for the bank? Right? So that is a problem with asset liability mismatch. Now, what if I say, understand this carefully, what if I say there are types of banks who will collect money from the market? There are types of banks which will collect money from the market for longer duration, and give loans for developers for longer duration. Is it not addressing the issue of asset liability mismatch? Is it okay? Right? There are, let's say, I'm just telling you a situation wherein, imagine there is an institution which will not collect small tenure loans, or which will not collect or borrow for a short tenure. No. They will borrow for longer duration. And what they will do? They will also lend for longer duration. Right? Basically, the issue of asset liability mismatch will not be faced by such institutions. And look at the next point here. Such institutions which borrow for longer duration and lend for longer duration are called as development finance institutions. Development finance institutions, DFIs. Development finance institutions. Sir, any example of a development finance institution in India? NABARD. NABARD is an example. Exim Bank. What is an Exim Bank? Export Import Bank. Right? So these are generally the examples of development finance institutions. Right? There are many types of DFIs in India. But understand this carefully. Can I now say that asset liability mismatch will become a very big problem for scheduled commercial banks? Is it okay? Asset liability mismatch will become a very big problem for scheduled commercial banks, SCBs. And it is these scheduled commercial banks which provide lot of loans for infrastructure development in India. These provide lot of these loans for infrastructure development. Is there any solution to this? We have development finance institutions as of now. Is there any further solution to this? Government of India has proposed a solution. And this is operational. Follow the discussion. What is the solution now? Government of India has proposed that it will set up and own, I'll repeat, it will establish and own a development finance institution. A new development finance institution will be set up by the government, will be owned by the government. And the name of this development finance institution is NABFID, National Bank for Financing Infrastructure Development, NABFID. Right, the long form is given here itself. Have a look at it. Right now, 100% of this is owned by the government. Is it okay? Right now, Government of India owns 100% of NABFID. Over a period of time, maybe after 10 years, after 20 years, we don't know. But after certain time period, government says, I will reduce my ownership. I'll reduce my ownership from 100% to 26%. Right now, who owns this NABFID? Only Government of India. But over a period of time, government says, I will reduce this ownership to 26%. Point number 2. Point number 3. Can a private sector now be allowed to set up a development finance institution? Right, because NABFID is going to be set up. Can we allow the private sector to set up the DFIs? Right, government says yes. All they need to do is go to Reserve Bank of India, go to RBI and take license, take approval from RBI, take a license from RBI, and if a private sector wants to set up a DFI, why not? We will promote that also. Point number 4. What are the functions of NABFID? What will be the role of NABFID? First and foremost, all of you will agree when I say the most important objective of NABFID will be to provide financing for development of infrastructure projects. Is it okay? It is to provide financing for development of infrastructure projects. That's a most important role of NABFID. But apart from this, right, there are many other functions which are associated with NABFID. For example, it will also provide consultancy services. It will also provide consultancy services. Sir, what do you mean by consultancy here? For example, you are a road developer. You are thinking of bidding for a project. There's a project. You want to bid for it, but you do not know, right, what is that project all about. You want to get certain advice. You want to get certain inputs from an agency. So the advice or recommendation or inputs will be provided by NABFID. Consultancy services will be provided by NABFID. And of course, they will charge money for it. They will provide the services and impose certain charges. It will also attract a lot of investment from the private sector. How is that possible? Let's say there is a project. Let's say there is a project. Cost of the project is 6,000 crore rupees. Right? Cost of the project is 6,000 crore rupees. And because the cost of the project is very, very high, you might see that private sector will not be interested in that because it is very, very high capital intensive. You require a lot of money. What if in this situation, NABFID will come and say that I will be willing to invest 40% of it. Think of it. NABFID will come together and say, I am ready to invest 40%. Now, if an agency owned by the government will start investing, don't you think private sector participation automatically will improve? Right? I hope it makes sense to you. Right? If the government-owned agency comes forward and says, I am ready to invest in these projects, right? Automatically, what will happen to private sector participation? Private sector participation will start, right, improving. Next one, organize and facilitate foreign investor participation in India. That's also very important. Why? The amount of investment requirements in India are very, very high. For example, if you remember earlier, I told about National Infrastructure Pipeline, NIP. We have not discussed that, I know that. But I've told you one point. Under National Infrastructure Pipeline, we want to invest more than 111 lakh crore rupees. I hope you remember the number here. Under National Infrastructure Pipeline, we want to invest more than 111 lakh crore rupees. Do you think all the private sector put together in India will be able to spend so much amount of money? No. Right? We would require the investment coming from foreign investment as well. Okay? Right? So, organize and facilitate foreign investments. Facilitate negotiations with various government authorities so that if there is any dispute, if there is any concern regarding giving approvals, these can be resolved. Now, infrastructure can be promoted. Okay, so these are certain very, very important functions which are associated with National Bank for Financing Infrastructure Development. It's basically a bank or let's say a financial institution which will promote infrastructure development. Which will promote infrastructure development. That is very important. And when you say they will promote infrastructure development, how many of you think they will collect deposits from people? Let me know. Right, such as you, such as me, they'll be collecting deposits from us. Fixed deposit, right? Or let's say savings bank account, recurring deposit. Of course, no. They are not interested in that. Why? They know that if I give you, right, if I give you a, let's say, a fixed deposit, it will be for 2 years, it will be for 3 years, etc., etc. Right? So basically, this institution is not focused on retail investors. No. They are interested in issuing instruments in the market which will have long duration. They can borrow from many other global agencies, etc., etc. That is how they will be able to get access to long tenure, right? Basically, long tenure, the capital or long tenure, the facility of money. Okay, so this is NABFID. Okay, next. What are the benefits of having NABFID? What is the advantage of having NABFID? One, infrastructure financing has a multiplier effect. Right? What is multiplier effect? I think I've discussed it, but anyways, I'll repeat it again. Please understand this. Multiplier effect means if you increase your expenditure, if you increase your investment by 1 rupee, GDP will increase by how much? Is it okay? I'll repeat it again. We'll simply say infrastructure has a multiplier effect. Right? What do you mean by multiplier effect? If you increase your investment by 1 rupee, by how much GDP will increase? Right? That is called as a multiplier effect. And as per various government surveys, whenever you invest in infrastructure, your multiplier effect is above 3. The multiplier effect is above 3. They'll give you a range, 3.5% to 5.5%. Meaning what? If you increase your investment in infrastructure by 1 rupee, the GDP will increase by 3 rupee. GDP will increase by 5 rupee. GDP will increase by 4 rupee, like this. So infrastructure financing is associated with multiplier effect. So we want this authority to invest more and more in infrastructure. Point number 2, if we have a development finance institution which will provide long-term loans for infrastructure development, the burden on the banking sector, especially scheduled commercial banks, automatically will come down. They do not have to provide all the loans that is required for the infrastructure now. There is one more authority which will provide these kind of long-term loans. And this is expected to promote a virtuous cycle, right? As a result of this, it is expected to promote a virtuous cycle in the economy. Employment will increase, demand for goods and services will increase, GDP will increase, etc. But having said so, there are a lot of concerns related to it. How it is going to work? There are concerns. One, land acquisition is a normal concern. Any problem with the term land acquisition here? Let me know. NABFID wants to provide investment, develop infrastructure, let's say road. But if they provide investment, what if road for construction of that land is not acquired? Right? It is a litigated land. Right? The people who own the land will go to court, etc., etc., etc. So land acquisition, you write it as a default for every infrastructure project. Is it okay? Acquiring land, by default, you write it as a problem in every infrastructure project. In fact, I think yesterday also I've given you one of the issues related to land acquisition or examples related to land acquisition, bullet train project. I hope you remember that. Second one, how the NABFID will be able to find which are good projects to invest upon. That is, there's a term called as a bankable project. There's a term called as bankable. Bankable means what? By investing in the project, you know there is a risk in the project. I hope you understand. What is the meaning of a bankable project? There is a project, you know there is a risk of investment in the project. But the developer has plans. The developer has options to, right, counter the risk. Right? There are plans, right, to basically offset the risk involved in the project. These are called as bankable projects. So now question is, how will they be able to find out which are bankable, which are non-bankable projects? Okay. Third one, bond markets are not developed enough in India. I'll come back to this, don't worry. There is an issue of a bond market in India, right? Why I've written it here? First and foremost, understand this. Generally, development finance institutions will issue long-term bonds in the market, borrow and invest or provide loans. Is it okay? I'll repeat it again. The development finance institutions, right, one way to get long-term money is issue long-term bonds in the market, get the money and invest in such infrastructure projects. But there is a problem with the bond market in India. I hope you understand this. There's a problem with the bond market itself in India. Right? Not today. I'll cover this. Right? Pakka I'll cover this when I take a financial market. the bond market is not very well developed in India. There are a lot of problems with the bond market in India, right? So will they be able to raise sufficient funds or not? That is one more concern here. And what if even NABFID will provide the investment, will provide the loans? What if there is a delay because government is not giving all the clearances? And delay is also a problem. I hope you understand. Delay is also a problem, right? For example, you have taken a loan from a bank and you basically expected to generate revenue from third year. Let's say you have taken a loan for the 10 years and you wanted to construct the road in 2 years, and from the third year you expected inflow of revenue. What if one of the agencies of Government of India will not give you clearances? Right, you have taken the loan, or people will go to High Court, they'll put a case against this project. As a result of this, rather than road being constructed in 2 years, now imagine the road is constructed after 5 years. Right, I hope you understand the problem here. Rather than road being constructed in 2 years, now the road will be over in 3 years. Will you be able to repay the loan in 10 years now? Think of it. Will you be able to repay the loan now? Of course no, right? So whenever there's a delay, right, the cost of the project will automatically go up. And the cost related to the projects automatically will start increasing. Right, so the government clearances might also delay the development of these projects, right, which will have an impact on investments that are done by NABFID. Done? Right, so these are some of the very important concerns related to the functioning of NABFID, National Bank for Financing Infrastructure Development. How NABFID has multiplier effect? If you provide a loan for construction of, let's say, road, the road developer will create employment. Road developer will purchase raw materials, etc. Will it not have a multiplier effect or not? Think of it. Will it not lead to a multiplier effect? People getting jobs, their salaries will increase. They will demand for more goods and services. Raw material demand increases. Production of raw material increases. There also employment is created, right? Jobs are generated. Again, the demand will increase. Will it not contribute ultimately to the GDP, gross domestic product? Of course, yes. Done? Right? One more question, sir. What is meaning of bankable infrastructure project? Bankable means any project for that matter, there is a risk. Everybody will agree? Is there anybody in the class who says, sir, absolutely no risk involved in a project? You want to construct a road, will the land acquisition become a risk or not? Right, the cost of the land, will it become a risk or not? Availability of labor, is it not a risk? You have constructed the road, now how many vehicles will come on the road? Is it not a risk? So for any project, there is a risk involved. Of course, yes, there is a risk involved. But when you say bankable infrastructure projects, the risk is there, but there is a plan to counter the risk. There are certain alternative plans to reduce or minimize the risk. That is called as a bankable infrastructure project. Okay, right? So this is basically the discussion regarding NABFID. Next one, small finance banks. SFB, small finance bank. Now, before discussing SFB, I will introduce one more concept to you people. That is the idea of financial inclusion. Financial inclusion. Now, what do you mean by financial inclusion? Let me define it first. Let me define it. Financial inclusion means providing financial services to the people who require them in a cost-effective manner. I will repeat the definition here. What do you mean by financial inclusion? It refers to providing financial services to the people who actually require them in a cost-effective manner. I'll give you examples. Let me know if you disagree with me. All of you heard of Janadhan Yojana? Janadhan Yojana, JDY, Pradhan Mantri Janadhan Yojana. What is one of the very important feature of a Janadhan Yojana? You could simply open a bank account with your Aadhaar number. You could simply open the bank account with Aadhaar number. Second, you can have zero balance. You can simply have zero balance in your account. These are very important. Why? Imagine there is a household in the village, poor house. Whether it is a poor house or a rich house or a middle class house, they will require a bank account. They need a bank account. Why? To deposit money, to withdraw money. Government will transfer a lot of subsidies for them, etc. They need a bank account. But earlier, there was one problem. What was the problem? You go to a bank, you want to open a bank account, the bank will ask for documentation. Those who are working in the bank and those who have opened their own account will understand the pain of it. Right? There was a requirement of a documentation. Right? What is this documentation? They will ask you for your address proof. They will ask you for your address proof. You will have to show a document wherein, and again they will have a list of documents. You cannot produce any other document which is not there in the list. You will have to produce a document where, right, your name is there and there is a clear-cut address written in the same document. Second, they will also ask for your ID proof, identification, ID proof. Right, so have a look at this. You will have to have right address proof. You will have to have ID proof. Is it over? Will you be allowed to open a bank account now? No, there is one more problem. You will have to have introducer signature. Those who open the bank account will find it right important now. Right, introduction signature has to be there. What do you mean by introduction signature? Somebody who has a bank account in the same bank will have to tell the bank, that is, they will have to sign in a particular column and say they know you. I hope you understand introduction signature. Right, a customer of the bank will have to sign in a document and say they know you. Right, that is called as a introduction signature. Now, many of you who have opened the bank account, you would get stuck up at this point. Right, you will get stuck up at this particular point itself. So understand the logic here. You will have to go through a lot of documentation work. Point number one. Point number two, imagine you go through all these hoops. You jump all these hurdles, you open a bank account. Congrats, now the bank manager will hand over a debit card, a nice shiny debit card to you. They will hand over the passbook to you, and they will also hand over a checkbook. This is where one more problem will come and tell you that at any point of time, you will have to maintain 1,000 rupee in your account. I hope you understand. At any point of time, you will have to have 1,000 rupee in your bank account, minimum balance. You will ask me, sir, what if I don't maintain 1,000 rupees? And is it uniform for all the banks? Of course, no. For public sector banks, it was 1,000 rupee. It was 1,000 rupee. For private sector banks, they will have their own limits. ICICI will have 10,000 rupees. HDFC will have 20,000 like this. But tell me, if there is a very poor house, very, very poor house. Sir, can you define a poor house? Right, where they are dependent on day-to-day work to satisfy their requirements. The people in the house will have to work every day to basically meet their day-to-day requirements. For example, food. Sir, any example, right? Can you give of a poor house? Those households which will derive their income through Manrega, MGNREGA. There are a lot of these poor households where their only dependency is Manrega wages or farm wages, etc. Now imagine this. Here is a poor house. Don't you think documentation will become a problem for them? right? Documentation is a problem for them. And minimum balance of 1000 rupee is also a very big problem for them. And as a result of this, what would happen? These poor households would not even get access to banking services. They would never get access to banking services. So what has the government of India done now? They've introduced a scheme by the name of Pradhan Mantri Jan Dhan Yojana, PMJDY. Under Pradhan Mantri Jan Dhan Yojana, you do not require to maintain minimum balance. Absolutely no. You want to keep 0 rupees in your balance, you are allowed to do that. Do you need multiple documentation? Not required. You have Aadhaar, go to the bank, they will open the bank account. Do you need introduction signature? Again, that is also not required. So now apply the definition of financial inclusion. Apply the definition of financial inclusion. What is the definition? Providing financial services to the people who require them in the cost-effective manner. Can I say this is the example of this? Let me know. This is the best example of this. Jan Dhan Yojana. I'll give you one more example. Right now, you imagine you have opened a bank account. And that is one more problem here. Right? Even under Jan Dhan Yojana, imagine you opened a bank account. But the bank branch is in another village. You are living in one village. The bank is there in another village. Right? Which is, let's say, around 10 kilometers away. How many of you think you can get access to your bank account on everyday basis? Let me know. That is, you can go to the bank every day, withdraw the money, deposit money, give an application for the loan, etc., etc. Is it accessible? No. Government of India has transferred subsidy into your bank account. Right? They have transferred, let's say, your pension into your bank account. But the bank account is, right, 10 kilometers away from you. Now, what is the problem here? Accessibility is a problem. Right? That is the reason there is one more initiative of Reserve Bank of India. From 2006, RBI has proposed and implemented one more initiative by the name of Bank Sathi. Very, very famous now. Bank Sathi. Right? Either they will be referred as a Bank Sathis or banking correspondents. Banking correspondence. Right? What is the role of a banking correspondence? Right? How many of you heard of the term mini ATM? Let me know. How many of you heard of the term mini ATM? During pandemic, this became very, very famous. Mini ATMs. Mini ATMs simply means, right, there is a machine here, small machine, which you can hold in the hand. That's the reason they will simply use the term handheld devices. Handheld devices. Sir, I've never seen it. At least have you seen machines where ATM cards are swiped like this? In the petrol bunk, in the cinema hall, right? In shops, restaurants, etc. Same logic you apply it here. It's a very small device. Right? At the top, there will be a provision for, right, making, let's say, thumbprints, scanning for thumbprint. And it is connected with internet. There is a keyboard here and there is a screen here. What is the use of it? Imagine you want to withdraw 5,000 rupees from your bank account. I hope you understand. Right? You want to withdraw 5,000 rupees from your bank account. You did not have to travel all the way to the bank now. You don't have to travel. What you can do is, there are people, there are service providers in a rural part of India. For example, there are a lot of individuals who will provide the Bank Sathi services. There are a lot of, right, even payment banks which will provide Bank Sathi services. Now have a look at this. You can go to this individual, provide your thumbprint, right, provide your account number, etc. Now, the individual will provide you 5,000 rupees. Of course, that is debited from your account. From your account, 5,000 rupees will be cut. The 5,000 rupees will be handed over to you and a receipt will be generated. Just like, right, the receipt you are seeing in all these shopping malls, etc. A receipt will be generated and the receipt will be given to you. This is basically the function of a bank sati. So give, right, the facilities such as withdrawal of money, provide facilities such as right, collection of deposits from people, right, provide them with facilities such as remittance services, provide them with facilities such as let's say opening of the bank account, application form, etc. All these are basically the services provided by Bank Sati. Now, can I simply say Bank Sati is also one of the initiatives to promote financial inclusion? Let me know. Bank Sati is also an initiative to promote financial inclusion. I hope it is clear now, right? Even Bank Satis can be considered as a financial inclusion measure. But of course, yes, there are problems here. There are problems. Don't say, sir, right, is this perfect? Of course, yes, there will be a problem. For example, a Bank Sati, right? Imagine you are the Bank Sati. I will come to you and I want to withdraw 5,000 rupees. Will you provide the services free of a cost? Let me know. Will you provide the services free of cost? How many of you say, sir, I will do it free of a cost? Then my dear, right, from where will you get the money? How will you earn your daily livelihood then? Charges are imposed. Charges are imposed. And second issue is, I said there is a mini ATM, right? That is a handheld device. Don't you think access to internet can also be a problem here? You're talking about a village. Don't say you might be sitting in a city, you are enjoying 5G services, although I found 5G services are very disruptive, right? So understand this, in a village, right, what if there is a disruption in electricity supply, disruption in terms of, let's say, internet services, will it not hamper all these services? I hope you understand this, okay? Now come back to the point of discussion here. We'll discuss two new types of banking systems in India. One is a small finance bank. Second one is a payment bank. Both have been proposed, implemented by Reserve Bank of India to promote financial inclusion itself. Let me start with small finance bank. It will promote financial inclusion by providing facilities such as a savings bank account. Right, savings bank account, right, mobilization of the deposits. And the small finance bank will have to meet PSL of 75%. The small finance bank, right, PSL is 75%, which means they will have to give lot of loans to farmers. They will have to give lot of loans to very small businessmen, etc., etc. Right, so it will promote financial inclusion, one, by providing facilities where people, households can save money, and second, by giving loans, right, under the PSL category. Okay. Now, minimum equity paid up capital. Equity paid up capital simply means how much money you are able to raise by selling the shares. Okay, I'll write it again. How much money you are able to raise by selling the shares. So minimum paid up equity capital by selling the share ownership of a small finance bank is 200 crore rupees. Okay. Can you bring in foreign investors? You want to set up this small finance bank. You have got the license of RBI. Can you raise the money from the foreign market? Can you bring foreign investors into the small finance bank? Allowed. It is allowed. Right, up to 74%, of the investment can come from the foreign market. Okay. Apart from this, it will accept a deposit because it's a bank. By default, it's a bank. It will accept a deposit. It will lend to those sections of the society such as small businesses, farmers, small industries, micro enterprises, etc., which require a lot of access to credit. Right, that is mainly the objective of a small finance bank, and that's the reason I said at least 75% of the credit issued, should be under the form of PSL itself. Right, they should cover under PSL. I hope remember what are covered under PSL. micro, small and medium enterprises, education loans, export credit, weaker sections of the society, mainly agriculture sector, right, etc. like this. So we are ensuring more and more flow of the credit to certain economy, part of the economy where they generally find it very difficult to get access to credit. Okay, at least 50% of the loans that are given, at least 50%, that is a number, at least 50% of the loans that are given should be of a value 25 lakh rupees. Sir, what is the meaning of it? I'll give a very simple example. Have a look at this. Imagine I'm a bank, right? Follow this carefully. Imagine I'm a bank. I'm supposed to meet a PSL of 75%, which means this year, if I'm giving, let's say 100 crore rupee loan, 75 crore rupee loan, I will have to provide to certain specific sectors. I'll take an extreme example. Let's say I will give all this 75 crore rupee to agriculture sector. Agriculture sector. Now, is there a possibility? Think of it. Is there a possibility that I will give all the 75 crore rupee in the agriculture sector, but to rich farmers? Is there a possibility? Let me know. I'll give all this 75 crore rupees to rich farmers and I'll tell the government I've met PSL of 75%. But are we meeting the objective here? What is the objective? Objective is to ensure that small farmers, right? There is a technical term here. Remember this. Small farmers, marginal farmers. What is the meaning of a marginal farmer? A farmer who is cultivating on a piece of land which is having a size of up to 1 hectare. Up to 1 hectare. And a small farmer is the one who is going to cultivate on a piece of land up to 2 hectares. More than 1 hectare, up to 2 hectares. Now, as expected, some of you are correcting me. Sir, it is not hectare, it is 2.5 acres. My dear, 1 hectare is equal to 2.5 acres. Simple. 1 hectare is equal to 2.5 acres. Right? So 2 hectares is equal to 5 acres. Right? You are using one unit, I am using another unit. Both are one and the same. Numbers are right changeable like this. Right? So understand this. Have a look at this. When PSL is 75%, should we simply ask them to meet the PSL, or should we ask them to ensure that loans will go to small and marginal farmers? Let me know. Should we simply ask them to give loan to agriculture sector, or within agriculture sector we should have one more regulation, ask them to ensure that they will give certain amount of loans to small and marginal farmers? Answer is, sir, we should have the second regulation as well. That is a precise reason whenever you talk about PSL, whenever you talk about priority sector lending, I told you agriculture sector will have a weightage of 18%. Agriculture sector will have a weightage of 18%. But it's not just that they will have to meet 18%. Within that also, there are regulations as to how much loans have to be given to small farmers, how much loans have to be given to marginal farmers. Is it okay? Right. So at least 50% of the loans should be of a value 25 lakh rupees, which means lot of loans, number of loans issued will be very, very high, but the value of the loans will be lower like this. Because otherwise what could happen is, this could be emulated by the SFBs. They'll simply give, right, let's say 20 crore to one farmer, another 25 crore to the second farmer, and 30 crore to the third farmer, and meet 75 crore rupees. But what if I say 50% of the loans should not be more than 25 lakh rupees? It means now they are forced to issue multiple loans to multiple farmers, right? Thereby ensuring that there's a good coverage of all the farmers. Done? Right? So this is a small finance bank. Right? Apart from this, please remember this. They will also have to maintain CRR as well as SLR. They will have to maintain CRR as well as SLR. The next concept is a payment bank. Sir, what is the minimum paid up capital? I've told it 4 times now. I'll repeat it 5th time. Imagine here is a company. This company to operate requires money. Anybody who says, no, sir, I don't require money, let me know. Then I'll ask you, tell me what is your business model. So this money has to be invested by whom? Owners. The money has to be invested by whom? Owners. And if, right, let's say you are one of the owner, when you invest, will you own a certain amount of stake, that is equity in a company or not? Right? I'll give you a current affairs example. Mr. Gautam Adani. Mr. Gautam Adani owns a certain stake in the Adani group or not? Why do you think the person is owning certain ownership? Because the investment has been done. So have a look at this. Whatever is the capital raised by the company, this money is nothing but capital. Whatever is the capital raised by the company, by issuing shares, this is called as paid up capital. This is referred to as paid up capital. Okay, so paid up capital in the context of small finance bank is 200 crore rupees, and in the context of payment banks, it is 100 crore rupees. Okay, point number 1. Again, just like SFBs, can foreign investment be brought in payment bank? Answer is yes. Right? In case of the foreign investment, up to 74% can be brought in. What are the capital requirements here? Right? The payment banks will have to maintain a CAR, capital adequacy ratio of 15%. The payment banks will have to maintain a CAR of 15%. And within this 15%, Tier 1 capital should be at least 7.5%, and remaining can be Tier 2. Is it okay? Tier 1 capital has to be at least 7.5%, and remaining can be Tier 2. Right? These are the capital requirements which RBI has imposed on the payment banks. And the function of a payment bank is what? 1, it will allow the customers to open deposits, but per customer, remember this, per customer, the deposit shall not be more than 2 lakh rupees. I'll repeat it. Right? A payment bank, can you open a bank account with the payment bank? Yes. Can you keep a deposit with the payment bank? Again, the answer is yes. But these payment banks, per customer, will not be allowed to collect more than 2 lakh rupees. Maximum amount is 2 lakh rupees. Earlier it was 1 lakh. Many of the books that you are reading still says 1 lakh. Updated. Right now it is 2 lakh rupees. Second, it will not be allowed to undertake any kind of lending activities. What do you mean by lending activities? They will not be allowed to give any types of loans. The payment banks will not be allowed to provide any kind of loans. Okay, point number 1. And point number 2, they will not be allowed to issue any credit card products. They will also be not allowed to issue any credit card products. Any difficulty in understanding a credit card? Credit card is basically a loan. Credit card is a type of a loan only. So when you are not allowed to issue loans, how will you be allowed to issue credit card products? No, they will not be allowed to issue. Third one, they will have to maintain CRR, cash reserve ratio. They'll have to maintain CRR. Fourth one, minimum 75% of the deposits that they've collected. Minimum 75% of the deposits that they've collected, they will have to invest in government securities. Right? Many of you are asking, how are they earning? I'm coming to that only. Minimum 75% of the deposits they have collected, they will have to invest in G securities. Will they earn interest on the G securities? All of you agree? Will they earn interest on the G securities? Yes. Remaining 25%, they will keep it in the form of deposits with other banks. So minimum 75% in government securities, remaining 25%, they will have to keep it in the form of deposits with other banks. Now, understand this carefully. When you keep deposit, you will earn interest. When, right, you will invest in government securities, you will earn interest. Point number 3, they are also allowed to provide remittance services. They are also allowed to provide remittance services. What do you mean by remittances here? Remittances simply means a transfer of funds. They are also allowed to provide remittance services, that is transfer of funds. For example, right, imagine a migrant labor has come from one of the states, let's say in northern part of India, to a state, let's say Maharashtra. The migrant labor has earned certain amount of money. Now they want to provide, or they want to transfer this money from this state to a state, or let's say into the hands of the people, family members staying in the hometown. They can use the payment banks to transfer the funds, and this is called as remittance services. Transferring of the funds is referred to as a remittance services. And when they provide remittance services, they will charge a certain amount of money on this. They will impose a certain amount of charges and collect it, right? So these are the resources, these are the different ways through which payment banks are expected to earn revenue. Is it sufficient? I hope you understand. Is it sufficient? Of course no, right? You're comparing between a payment bank and an SBI. I hope you understand. You're making a comparison between a payment bank and SBI. That is the reason you're thinking, okay, payment banks will not earn revenue. But no, through government bonds, through deposits in other banks, by providing remittance services, by providing many of the other value-added services, payment bank will earn a revenue, but it is not sufficient, right? I'm only saying it's not sufficient. That's the reason when the model of payment bank was proposed by RBI, many people, many companies were interested. I hope you understand this. Initially, when this model was proposed by RBI, many of the people were interested in this. Many got licenses also. But many of them did not even start. They surrendered. They gave the licenses back to the RBI. Why? They got the licenses, they looked at the model of payment bank, they realized that, okay, revenue potential is not very high here. Is it okay? The revenue potential is not very high, right? So I will not be investing in a payment bank. Some of them actually started. I'll give a current affairs example. Some of them actually started and closed. They basically said, no, right, we are incurring losses, will not continue to operate, payment banks, we will close it. I'll give an example. Aditya Birla Company. Aditya Birla Company, right? Aditya Birla Company. So have a look at this. Some of the companies which got licenses, right, they basically, right, surrendered the licenses because they did not find any, right, revenue model here. Second, some of them started, but they realized, okay, it is not an efficient model. We will incur losses like this. They shut down the shop, surrendered the licenses. So very, very few of them are actually operational in India today. For example, we have India Post Payment Bank. We have Airtel Payment Bank, etc., etc. Right? Or for that matter, Paytm Payment Bank, etc. So this is how the payment banks have been operating in India. Okay, the payment banks are operational like this. Now, some of you are asking, sir, right, what is the need for all of this? Why should we provide all of this? Let me ask you a very simple question. Imagine you are RBI governor. Think of it and answer it to me. Imagine you are the RBI governor. I will approach you and ask for a scheduled commercial bank license. And not just any scheduled commercial bank license. I will ask you for universal bank license. Understand this. What is the meaning of universal bank? The type of services provided by the bank are diversified. Diversified type of bank services. Sir, what do you mean by diversified bank services? Tell me, what kind of services are provided by SBI? What kind of services are provided by SBI? You can keep on listing. You can open deposit accounts. You can take multiple loans. You can take gold loan. You can even get insurance services from them, locker facility from them, etc., etc., etc. Right? So whenever these types of services, large number of services, not limited, large number of services are provided, these are called as universal services. But do you think the same thing is applicable to payment bank? Let me know. Do you think the same thing is applicable to payment bank? Right? Do you think payment banks will provide large number of services to you? Absolutely no. Limited services. Limited services. Right? And that's the reason generally the payment banks are also referred to as niche banks. Niche banks. Right? What do you mean by niche? Very limited space. Very, very limited space is there, niche banking. Now think of this, right? Think of this and answer. I will come to you. I will apply for a license for universal banking. As an RBI governor, will you simply give it to me? Let me know. As an RBI governor, will you simply give it to me? Right? You will not give the license to me. Why? I do not have any banking experience. I have no banking experience whatsoever. So, does it make a sense for me to first enter into payment bank? Think of it. Does it make sense for you as an RBI governor that you will tell me, sir, because you do not have any banking experience, no, I will not be able to give it to you. Maybe try out payment banking first. Try out payment banks. You operate for 3 years, you operate for 5 years. Then I will allow you to convert into small finance bank. Try out payment bank first. Maybe after 3 years, 5 years, I will allow you to convert into a small finance bank. Now operate a small finance bank, let's say for 5 years. Then I will allow you to convert into universal bank. Tell me which is better, which is a good system. Applying for a license of a universal bank, getting it, or moving into the banking system like this through experience. As an RBI governor, you will prefer one or two. You will prefer a direct universal license or a migration like this. Don't you think the second one makes more sense? That's the reason RBI, or some of you are saying first, no my dear, then you're a very bad RBI governor. Then you're simply a very, very bad RBI governor because you don't know whether the person has banking experience or not. Simply you will give license. Right? Are you not playing with the depositors' money? Right? Think of it. Right? So argument is simple. RBI now says, I will not directly give you a universal license. I will not allow you to operate as a universal bank directly like this. In the past, we have tried it. Sometimes it has backfired. So what RBI now says is, first work as a payment bank. Maybe after some years, I will allow you to migrate into SFB. After some years, I will allow you to migrate into universal banking. Right? So that by the time you get a license for universal banking, you are very well established. You have a lot of banking experience. Done? So this is the reason why these types of concepts are introduced by Reserve Bank of India. Okay, so let's take a break now. But before the break, let me address your questions first. What is PMC Bank? PMC is, right, PMC is basically one of the cooperative banks. It is one of the cooperative banks. It fell into a crisis because they borrowed a lot of deposit from the customers and they gave loan to some of the companies, and these companies incurred losses. And when companies will incur the losses, automatically the bank incurred the losses, and basically RBI was forced to overtake the functions of this bank. Okay. Yesterday, that NARCL will give banks if promised more amount by contingent asset. Why should NARCL give more guarantee? Okay, I don't know what you're asking. Right, I don't know what is the question. Please rephrase your question. I'm unable to understand the question. The qualitative and quantitative measures of credit control are only for scheduled commercial banks. So though, What means the non-scheduled commercial bank? I've told you the differences already. In case of scheduled commercial banks, these banks will always have an opportunity or an option of going to RBI, borrowing from RBI. Non-scheduled commercial banks will not, or there is no compulsion on them to follow all of this. It is up to them, right? Because they are not part of Schedule 2 of RBI Act. Sir, what was your opinion that everything is attached with Aadhaar card? It can lead to data leakage. Again, whenever you discuss all of these things, there are concerns. I hope you understand. There are always data privacy or let's say data breach concerns. But again, government has been using Aadhaar as an initiative where most of the benefits are connecting it, right, providing it through Aadhaar. Okay. Will the Deccan Grameen Bank or small finance bank or RRB? Right? As far as I know, these are small. These are RRBs, and they can migrate. They can migrate. Right? Sometimes, let's say this same slide you're using, reading it next year. One of the, let's say, banks could be closed also by next year. Again, I'm just giving an example. So whatever I give, that's the reason I generally tell the students, do not by heart the list. Please do not by heart the list. I gave you a list of non-scheduled commercial banks. Do not by heart it. I gave you examples of RRBs. Do not by heart it. Not needed for UPSC. Why? Tomorrow itself, one of these RRBs can apply for a license and become, let's say, SFB or become, let's say, a universal bank. Then automatically the list has to be changed. But I cannot come to your home, take your laptop and put edit as a function and change it. That's the reason. Do not by heart those lists. It is not relevant for UPSC. Okay. What is the aim of financial inclusion? My dear, you do not want poor people to get access to banking services. Let me know. You do not want, right, the people to get access to banking services. You do not want the people to get access to insurance services. Right? So that's the reason. That's the reason I told you, whenever you provide financial services, for example, banking services, insurance services. Can I give you examples for insurance services? How many of you heard of Pradhana Mantri Jeevan Jyoti Bima Yojana? Pradhana Mantri Jeevan Jyoti Bima Yojana. Pradhana Mantri Suraksha Bima Yojana. These are insurance products. Do you think Mr. Mukesh Ambani will apply for Pradhana Mantri Jeevan Jyoti Bima Yojana? No. Right? These are targeted at poor houses. These are targeted at unorganized workers, etc. like this. That's the reason. Okay. You are trying to ensure that people who require these kind of services will be provided these financial services. Okay. Sir, any bank which provides them, many banks are there. You go to any public sector bank. Go to public sector bank, you will see these kind of products offered by them. Right. For example, SBI. Example, SBI. Capital requirements of SFB, capital requirements in the SFB, small finance bank is 200 crores. Right, minimum paid up capital requirement is 200 crores and they will have to maintain CRR, SLR, etc. What is a universal bank? Universal banks are those banks which will provide all the types of financial services, banking services. I hope you understand. Right, again, this is not required, but because you have asked, I'll write a point here. Have a look at this. Traditionally, when you started discussing the idea of a bank, traditional, right, 200 years ago, 300 years ago, etc., what was the bank supposed to do? Bank would basically be involved in two activities. Borrow money from the people, that is collect deposits, and give loans. Is it okay? Traditional concept of a bank. Borrow, right, from the depositors and give loans. But do you think the banking services are limited to just collection of deposit and giving loans today? How many of you think that? Right? Banks are just involved in collection of deposit and giving a loan. Absolutely no. These banks have got many more services now. The banks will offer many more services in addition to this. For example, locker facility, gold loan, remittance services, right, or mutual fund products, insurance products, etc. Right? So understand this carefully. Whenever you use the term universal banking, these are anyways provided, but in addition to this, many more other services will also be provided. For example, SBI. SBI provides all of these services, universal banking. But when you use the term niche bank, it is not just going to provide all the services, it will provide limited services. For example, payment bank, it is going to only borrow from the customers, collect deposits, no loans, right? Limited services will be provided. Okay, right? So what is locker services? My goodness, haven't you heard the term locker services so far? This is actually surprising, right? Have you not heard locker services? Right? Locker services means basically a locker. Right now you'll ask me, sir, what is locker? A small space, a cupboard is given by the bank where you can store your valuables, right? Such as gold. Okay, so that's a locker service. Done, right? So this is basically the idea of a niche banking as well as universal banking. Okay, so let's take a break now. Let's take a break. I'll restart at 8:06. I'll restart at 8:06. Okay, take a break. Okay, welcome back. Am I audible? Am I audible? Let me know. Okay, let's start then. Certain committees, we are at the fag end of banking now. We are almost at the end of finishing the banking chapter. Okay. Anyways, certain committees. One is the Narsimham Committee 1991. Now, what is this Narsimham Committee? Remember this. Government of India set up committees to recommend regarding financial system. Committee on Financial System, CFS. Committee on Financial System, CFS. Now, this Committee on Financial System was set up twice by government. One in 1991, second one in 1998. And both the times, it was headed by the same person, M. Narsimham. Okay, hence these committees are referred to as Narsimham Committee. So remember this, do not be confused in exam. Please don't get confused. Narsimham Committee, right, basically related to banking sector, or Committee on Financial System. Both are one and the same. So 1991 Narsimham Committee, 1998 Narsimham Committee. Okay. Now, what are the recommendations of Narsimham Committee? Let's go one by one. First, further branch licensing policy should not be there. Right? What is this idea of a branch licensing policy? Even today, you want to open up, let's say, 100 branches in India. As a bank, imagine you want to open up 100 branches in India. You need the approval of RBI. You need certain, right, you need to come under certain regulations of RBI, Reserve Bank of India. Sir, what kind of a regulation here? Let me ask you a very simple question. Think of it and answer it rationally. Imagine I'm a private sector bank. I want to open 100 branches. You tell me, will I open all these 100 branches in villages and cities or only in cities? I'm a private sector bank, by the way. Will I be opening these particular branches in both villages and cities or only in cities? All of you will agree? I will target cities because I will earn more and more profit. Now, as an RBI governor, you think of it, should I be allowed to do that? Right? So, should you have regulation over it? Should you have certain condition over it? Answer is yes. That is the reason why we have a concept called as branch licensing. We have the idea called as branch licensing. That is, even before you open the branches, first you should need approval of RBI, and second, RBI will tell you in 1 year, imagine you open up 100 branches, at least 25% of them should be opened in villages. You should open some of them in villages. That is a branch licensing policy. But why does this committee says we should discontinue it? Why does Narsimham Committee say we should not have it? The reasoning that was given by Narsimham Committee is, if I am opening the branches, I should be given the choice where I want to open. Does it make sense or not? Let me know. If I am opening the branches, it should be my decision where I want to open. How many branches I want to open should be my decision. RBI should not be involved in that. So based on that argument, this committee said we should not have a licensing policy like this. Give the autonomy, give the freedom to the bank to decide where they want to open the branches. We have not implemented it. No further nationalization, but this has been done. Post 1991, you tell me if you come across any example wherein a bank has been nationalized. I hope you understand. Right? Any example that you come across where after 1991, the bank has been nationalized? No. In fact, we have discussed this. After 1991. Right? So before 1991, did we go for nationalization? Of course, yes. We have gone for 2 rounds of nationalization. But after 1991, no, we have not nationalized any banks. Rather, we have allowed private sector participation. We have allowed domestic companies to participate. That is, domestic private sector to open up banking sector in India or enter into banking sector. Foreign banks have been allowed to enter into India, etc. So further nationalization should not be conducted. Third, the priority sector lending should be brought down to 10%. Right? It's more than, right? I'm sorry, it's 40%. It should be brought down to 10%. Why? Right? Think of it. Imagine you are a private sector bank. Just understand this. You are a private sector bank. RBI will ask you to keep certain deposits with itself. RBI will also ask you to give loans to agriculture sector. And don't you think it should be your decision? I hope you understand. Lending activity should be your decision. RBI should not be dictating terms to you. Because if you are given a choice, even if you give loans to agriculture sector, you will charge a slightly higher rate of interest rather than providing at lower rate of interest. So PSL should be brought down to 10%. Earlier SLR and CRR were very high. These were brought down, right, based on the recommendation of Narasimham Committee. Okay. Computerization in the banking sector. I'm pretty sure all of you visited a bank. I'm pretty sure all of you have visited the bank. Now, when you visited the bank, did you see the usage of computers or not? Right? Why this is important? Earlier, right? Earlier, before computerization, literally the banks used to carry books. I hope you understand. Right? Sir, any example you must have seen in old Hindi movies. There will be a person called as Munshi Ji. UPSC will not ask you this, don't worry. Right? There would be a person called as Munshi Ji, and they would be carrying very, very big books like this. These are called as ledger books or ledger accounts. Literally big, very large books were used earlier, and physically everything or every entry has to be done. But now, no, we do not have this concept of a ledger book or Munshi Ji, etc., etc. Everything is computerized. Everything is computerized. It has increased efficiency. It has helped bank connect with each other, right? So that is the advantage of computerization. Next, debt recovery tribunal to be set up. Do we have DRTs in India? Yesterday we have discussed this. Do we have DRTs in India? Yes. Recommendation came from Narasimham Committee 1991. Now there is a question, sir, is it 1975 committee? No, my dear. 1975 committee is associated with regional rural banks. This is our committee on a financial system 1991. Okay. Furthermore recommendations, you need to set up asset reconstruction companies. Did we discuss ARCs yesterday? Let me know. We have discussed this, by the way. Sir, in what context did you discuss it? We discussed it before NARCL. Before we discussed NARCL, I told you ARCs are functioning in India. There are 28 ARCs, etc., etc. Recommendation came from Narasimham Committee. Next, private sector entry. That is, private sector should be allowed to provide banking services. Licenses should be issued to them. Banks should be allowed to raise capital by issue of shares. Let the banks go to the market. Let them issue shares. Let them raise capital. Are we allowing the banks to do that? Answer is yes, by the way. I hope you understand. Answer is yes. Banks in India are allowed to go to the market, issue the shares and raise capital. They are allowed to do that. And finally, the banking structure should be divided into four classifications. At the top, we should have larger banks, which will focus on infrastructure loans, which will focus on giving large value loans. Below that, there should be 8 to 10 national banks, which will be majorly focused in urban part of India, which will provide facilities to middle class households, will collect the deposits, give loans to them, etc., etc. But apart from that, we should also have local banks as well as rural banks, which will focus on regional, that is village level financing requirements. Right, so these are the recommendations which were given by Narasimham Committee, 1991. Second set of recommendations, 1998. Right, CFS 2, right, 1998. Set up Credit Information Bureau. Now let me elaborate on this. There is one organization in India, financial institution in India, that is CIBIL. How many of you heard of this? Let me know. How many of you have heard of this? Even if you have not gone through a CIBIL score, I'm pretty sure you must have seen certain advertisements where in the ads they will say, if you have a very good CIBIL score, you will find it easier to get loans. There are a lot of these new age lenders who have come up who will simply give you loans without collecting any collateral online, digital lending apps. They'll focus on the concept of CIBIL score. Now, what is the CIBIL? CIBIL stands for Credit Information Bureau of India Limited. Credit Information Bureau of India Limited. Now, what is this Credit Information Bureau? They will assess or evaluate. Either you can use the term assess or evaluate whether the borrower is credit worthy or not. Sir, what do you mean by credit worthy? Let me explain it. Imagine you have taken loan from bank 1. Right? You ran away from that city. Simply ran away. Now you moved from city 1 to city 2. Now you'll apply for loan from bank 2. How many of you think that bank 2 should also give you loan? Let me know. Right? How many of you think that even the second bank should give you loan? Because if the second bank gives you loan, right, what you'll do? Couple of more years. You will get relocated from city 2 to city 3. Again you will run away. So what will happen is you will keep on creating non-performing assets in the market. You'll keep on creating NPAs in the market. So what we have done is we have created a new system. That is, we will find out the person who is taking the loan, whether he is a good borrower, whether he has a credit worthiness or not. And for example, we provide a score to them. Just like UPSC will provide scores to you, even the CIBIL will provide scores to you. Generally, the scores will be in the range of 300 to 900. The CIBIL scores are in the range of 300 to 900. 300 being the lowest and the 900 being the highest. And have a look at this. If a person has the score very nearer to 900, a person has a score very much nearer to 900, it simply means the person is a very good borrower. What do you mean by very good borrower? The person has taken the loans, has repaid the loans. He is credit worthy. He is a very good borrower. They will take the loan and they will repay the loan. Right? That is the basic idea. That is the basic idea of CIBIL score. And you apply for loans. First, they will ask you is, what is your CIBIL score? Those who have applied for the loans or the credit card, etc., they will know that. They will ask you first, what is your CIBIL score? And you have a credit card, you default on the payment, your CIBIL score will go down. You have taken the loan from, let's say, Bajaj Capital. You think nothing will happen if you run away from Bajaj Capital from repaying the loan. They will report to CIBIL. Your CIBIL score will go down. So the argument is simple here, right? We are trying to find out, we are trying to ascertain what kind of borrowers we have. And if the CIBIL score is very high, generally understand this and don't expect UPSC to ask you this. Whenever the CIBIL score is more than 700, right, it is considered to be good. It is considered to be good. Banks will not have any problem in giving loans to you. But your CIBIL score is, right, let's say 300. CIBIL score is 320. Then the bank says, sir, thank you, dhanyavad. Thanks for application, but no, I will not give you loan. Right? Why? You are a very, very bad borrower. You keep on defaulting on the loans. Right? So setting up of Credit Information Bureau, one recommendation. Next, merger of strong banks to create a much larger bank. Right? There are banks here, good banks, strong banks means which are very good, right? Let's say asset base, whose lending activities are good, whose NPAs are lower. Now you merge these kind of banks, create a much bigger bank. What was the objective? If you create a much bigger bank, now they'll be able to focus on development of infrastructure. They'll be able to provide large value loans in the market. And that was the second recommendation. Weaker banks should be called as narrow banks. Understand this? Weaker banks should be referred to as a narrow banks. What is this idea of narrow banking? Understand this carefully. Narrow banking means they will not be allowed to use their deposits in giving loans. I hope you understand. The RBI will put a lot of restrictions. RBI tells them, do not use your deposits in giving loans. Why? You have incurred a lot of losses. The losses incurred by the bank are very, very high. And when the losses incurred by the banks are very, very high, should the bank be allowed to give loans again? If they are allowed to give loans again, basically it will again add to losses, because they are making very bad decisions here, giving loans to people who do not deserve the loans, who have defaulted on it, etc. So that is a precise reason what RBI tells these banks is, whatever deposits you have, invest in G securities. Whatever deposits you have, invest in G securities. And have a look at this, a bank which is investing but only in G securities, can I call this as narrow banking? Let me know. The term narrow means what? Very limited. I hope you understand. Narrow means very limited, like this. So a bank, rather than being allowed to give loans in the market, will be asked by RBI, don't give loans, you are incurring losses. If you keep on giving loans, your losses will increase and you will be forced to shut down. But then the bank will simply say, I've collected deposits. What do I do? RBI says, do not give loans, rather invest in G securities. Can I call this activity as a narrow banking or not? Please do let me know. Right, so basically these weaker banks were asked to do this kind of activity. Right, that is a narrow. Right, greater autonomy should be given to the bank boards. Right, for example, bank boards should be allowed to take decisions regarding where they want to give loans, to whom they want to give loans, how many branches they are supposed to open, where they are supposed to open, etc., etc. Give more power to the bank. Do not allow RBI, Government of India, to impose a lot of regulations on them. And finally, the owner should not be the regulator in the bank. The owner should be different, regulator should be different. Sir, what do you mean by this? Public sector bank, PSB. You tell me, who is the owner? Public sector bank, who is the owner? Look at the term public. Government of India. All of you will agree? Government of India has more than 50% ownership in the public sector bank. Who is the regulator? RBI. But who owns the regulator? Who owns the regulator? Again, Government of India. Now tell me, Government of India is regulating banking sector through RBI. Government of India owns the public sector banks. Right? Don't you think? Right? Basically, there's a conflict here. I hope you understand. Don't you think there is a conflict, right? Conflict of objectives. You want to regulate also, you want to earn profit also. How both of them will go hand in hand? Right? There is this particular conflict. That's the reason the recommendation was, take away the ownership. Simply take away the ownership from Government of India. Do not privatize them. Do not privatize. Take away the ownership, create one more entity and transfer the ownership into another entity. I hope you understand. Right? Do not allow the same entity to act as a regulator as well as the owner. There is a conflict there. Right? So what you should do is, take away the ownership from Government of India. Do not allow them to own it directly like this. Create one more entity and transfer the ownership into one more entity. That was the recommendation given by Narasimham Committee 1998. Okay? Right? So these are certain very, very important recommendations given by Narasimham Committee. Any difficulty? Any difficulty? Let me know. Why it recommended banks should not be nationalized? Because rather than allowing Government of India to start owning all the banks, allow private sector entry. You tell me, right, do you think only public sector banks will be good for Indian economy? Think of it. Just think of it, right? All the banks in India are owned by government of India. Is it good for Indian economy? No, it's never good. In fact, I'll tell you the history here. When I discussed RBI, I told you one point. I said that Reserve Bank of India initially when it was set up, RBI initially when it was set up, it was not owned by government of India. I hope you understand. RBI when it was set up initially was not owned by government of India. It was actually a shareholder ownership. There were around 4,000 owners, shareholders of RBI. Why do you think? Why do you think that system was established by the British government? British government said, if I own it, I will intervene. Again, when I say British government, 1947, before that, right? I hope you understand, right? If I own it, I will start intervening. I'll start controlling the function of this particular bank. So I don't want to own it. Let's have a private ownership, right? That is a precise reason. Understand this, right? Rather than having all the banks owned by government, it makes more sense to have private sector banks so that the competition will be there. There will be, of course, very good competition between banks owned by the government as well as private sector bank. Okay. What is a narrow bank? I'll repeat it. When the bank will be asked to do only specific activities because the bank's losses are very, very high, this is called as a narrow banking. Okay. Now let's start. Last concept within the banking here, NBFCs. Last concept, that is NBFCs. First and foremost, it's not a bank. NBFC is not a bank. What is an NBFC? Non-banking financial company. Non-banking financial company. Right? Look at the term itself, you'll understand. It's not a bank, it's a non-banking financial company. Now, many of you will ask me, sir, give me the definition. Give me the definition of NBFC. I will say don't by heart the definition as given by RBI. Because I know many of you will keep on testing me, you'll keep on typing in the Google on the side by side and check whether I'm telling you correct or not. Try to find out any mistake so that I will correct the faculty, etc., etc. I know that. I know perfectly, very well I know. So have a look at this. If you type NBFC definition, it will take you to RBI website. And you'll be wondering where the definition is given because everything is there in paragraph. I will tell you. RBI has not given the definition of NBFC in 2 lines, it has given a paragraph. So again, my advice to you people, do not by heart that. It is not needed for UPSC and it's not easy also. It's very, very technical. Then what you should understand then? When I say NBFC, what you should understand? One, these are companies. All of you will agree? Look at the name itself. These are companies. These are registered under Companies Act. Right? What about the banks? Let me see. What about the banks? These are covered under Banking Regulation Act of 1949. All of you remember this? Right? NBFCs are registered under Companies Act. What about banks? These are under Banking Regulation Act of 1949. Point number 2. The banking sector is part of payment settlement system. Banking sector is a part of payment settlement system. Remember this, payment settlement system. What do you mean by payment settlement system? Please have a look at this. Payment settlement system simply means allowing transactions to be conducted either using digital modes or paper mode. What do you mean by payment settlement? Transfer of funds from one account to another account. Transfer of funds will happen either using a digital mode or a paper mode. Sir, any example of a digital mode? Have you heard of NEFT? Have you heard or not? NEFT. Have you heard of RTGS? Right? These are digital modes of fund transfers. These are digital modes of fund transfers. NEFT stands for National Electronic Fund Transfer. RTGS stands for Real-Time Gross Settlement System. From one account to another account, you can easily transfer funds using these types of digital modes. What about paper? Checks. Best example is a check. Can you transfer fund from one account to another account using a check? Answer is yes. Answer is simply yes. So banking sector is part of the payment settlement system. NBFC is not a part of payment settlement system. Is it okay? Banking is a part of payment settlement system. NBFC is not a part of payment settlement system. For example, can you go to, sir, any example of NBFC? Bajaj Capital. I'll give you famous examples. Bajaj Capital, Reliance Money, etc. How many of you think Bajaj Capital, you can go to the office of Bajaj Capital and give them a check, ask them to transfer funds from one account to another account? Let me know. Try it out. First thing, the manager who is sitting there will tell you, sir, this is not a bank. I hope you understand. First thing they will tell you is, sir, this is not a bank. I cannot facilitate NEFT. I cannot provide you the facility of RTGS. And what is the meaning of it? RBI has various payment settlement systems, and these cannot provide those services to you, but the banks can provide. But on the other hand, can you walk into an SBI, right, ask for transfer of funds? Can you do that? Of course, yes. Right? Can you ask for a check issuance? Of course, yes. I'll give you one more very important difference here. Banks issue checks. Banks issue checks. Right? Non-banking financial companies do not issue checks. They do not issue checks. Right? That is one more very important difference. Fourth very important difference, banks can collect any type of a deposit. It could be savings bank, it could be a savings bank account, as well as a fixed deposit, that is term deposit. That is a term deposit. So time deposits as well as a term deposits can be collected by the bank. What about non-banking financial companies? They are not allowed time deposit. They are not allowed demand deposits. Right? They are not allowed demand deposits. They are allowed to collect only term deposits. And that too, the tenure is up to 5 years. Up to 5 years. 12 months up to 5 years. So now, is it okay? Right? Why the banks are different from NBFCs? What is the difference between them? It should be clear to you. Right? So NBFCs are companies which are given a license for providing certain type of financial services. They are given a license and they can provide certain types of financial services, but they are not banks. Because they are providing financial services, they are not at all banks. These are simply or strictly NBFCs. Right? So that is basically the idea of a non-banking financial company. These are financial institutions which will provide banking services, right, without meeting the legal definition of bank. They do not have the legal definition. They are not covered under the Banking Regulation Act. No, they are covered under the Companies Act of 2013. What kind of functions do the NBFCs do? It's a very, very huge list. The NBFCs will provide a lot of services to you. I'll give a very simple example. Right? Let's start. Simple examples. Right? Brokerage services. Have you heard of it? Brokerage services. Housing loans. Right? Loans for consumer credit. Right? Factoring services. Factoring services. We have discussed factoring earlier. Right? I think we have discussed it. If not, I'll cover it under MSME. Don't worry. Factoring services. Right? They will provide a P2P services. P2P lending activity services. Right? The purchase of machinery. There are a lot of services like this. But again, please remember this. These are no way covered under the definition of a bank. They will provide all of these services, but these are not banks. Done? These are registered under the Companies Act of 1956. These have been kept under the regulatory control of RBI from 1997. Right? Regulation will come under Reserve Bank of India. But please understand, RBI also says, we need to identify these into different groups. We need to classify them into different groups. Why? Some are deposit taking, some are non-deposit taking. I hope you understand this. Some are deposit taking, some are non-deposit taking. For example, imagine here is a NBFC which is going to provide you loans for purchasing machinery, and they will raise the money from different, let's say, bond market, etc., etc. Are they collecting deposits from customers? Right? No. But on the other hand, let's say there is one more NBFC, Bajaj Capital. They will collect a 5-year term deposit from customer. Can I call this as a deposit taking NBFC? So understand the logic here. NBFCs are further divided into two types, which are deposit taking as well as non-deposit taking. All of them will be registered with RBI. They will have to get a certificate from RBI. But RBI says, I cannot regulate all of them. It becomes very difficult for me. I cannot regulate all of them. For example, a stock broking agency, stock brokerage or brokerage services. I'm pretty sure you have heard of this stock brokerage. They will allow or they will facilitate your investments in the stock market. Right? They will facilitate your investment in the stock market, brokerage services. But please understand, it's not a deposit from a customer. Is the logic okay? Right? It's not collecting a deposit. It's not a term deposit. It's an investment. Right? So the argument is RBI should not regulate it. RBI should give the power to somebody else. So all of them are registered. Certificate of registration will come from RBI. But RBI itself says there are many different regulators. They will come under different regulators. For example, insurance companies. Insurance companies. These are NBFCs. Do you think RBI should regulate insurance companies? Think of it. Should RBI regulate insurance companies? Does it make sense? Right? Does the insurance company collect money from you in the form of savings bank account? Does it give you loan in the form of, let's say, housing loan, etc.? No. Right? Hence, there is one more authority, Insurance Regulatory Development Authority, IRDAI. Right? Various agencies are there, but registration is with RBI. Okay? So deposit taking NBFCs must be registered with RBI, and some of the NBFCs are regulated by other agencies. Okay, so these are certain very important points regarding NBFCs. Now I'll come back to this, don't worry. What is the importance of NBFC? Why NBFCs are important for Indian economy, and not just Indian economy, even in the global market, why they are important? Point number one, these are also referred to as shadow banks. Remember this. They'll say that NBFCs are part of a shadow banking. Right? What do you mean by shadow banking here? Shadow banking means there are many other loan products, or there are many types of loan products which are not offered by the bank but are offered by NBFCs. Many borrowers will not be able to take a loan from a bank for various reasons, but NBFCs will provide loans to them. That's the reason they will simply say NBFCs are part of shadow banks like this. Now, what are the important ways through which they will provide lending activity? First one, they will provide loans to those risky borrowers or those which are not able to get the loans from the banks. For example, imagine you have a very low CIBIL score. Imagine you have a very, very low CIBIL score. So when you have a very low CIBIL score, right, do you think a bank will take a risk by giving you a loan? A bank will classify you as a very risky borrower. So you will run from bank 1 to 2, 3, 4, etc. Right? Most of the banks will look at your CIBIL score and say, sorry, sir, I will not be able to give you loan. Why? One of the parameters that we are looking is CIBIL score should be at least this much. You are a risky borrower, hence I will not be able to give you a loan. Now, NBFC says, I will give you loan. Have a look at this. NBFCs will pitch in and say, I will give you loan. Don't worry. No bank is giving you loan. I will give you loan. Right? But here is a catch. Rate of interest that I charge will be higher. The rate of interest that I'll be charging you will be higher. Right? So that is one. they will provide loans to unbanked or risky borrowers. But have a look at the advantage, other advantage related to this. Imagine you are having a very low CIBIL score. Now you will take a loan from NBFC. You will promptly repay the loan. You will not default on it. You will repay the loan. Now tell me, if you repay the loan correctly, what will happen to your CIBIL score? Let me know. What will happen to your CIBIL score? Do you think CIBIL score will remain the same? No, CIBIL score will start increasing. Does it not? Of course, it makes perfect sense. You will make the correct repayment on correct day basis. Your CIBIL score will increase. Now, let's say your CIBIL score goes up to 500, 600, 700 because of this. Can you take a future loan from the bank now? Possible? Think of it, right? Because of this, your CIBIL score will improve. In the future, you want to take a loan with a higher CIBIL score or an improved CIBIL score. Will you be able to take a loan from a bank now? Yes, right? Have a look at the third point. Have a look at the third point. Unbanked borrowers will be helped to become a bank borrowers now, right? Because the CIBIL score has improved. It means you are a good borrower now. You have repaid the loans in the past. Now you can take a loan from a bank. Third one, many of the NBFCs are specialized in sectors. A bank, for example, SBI, right? How many of you think SBI is specialized in only one type of lending activity? Right? Think of it. SBI will give you agriculture loan. SBI will give you, right, corporate loan. SBI will give you gold loan. SBI will give you, right, personal loan, XYZ. One bank is giving all the types of loan products. Do you think it is specialized in any one of them? Can it specialize in any one of them? Not possible. They will give you wide variety of loan services. But let's say I'll give you one example, Muthoot Finance. Muthoot Finance, is it not specialized in only one type of a loan? Right? I'll give you one more example. The India Money, right? Or let's say India Bulls. India Bulls is specialized in housing loans. Right? You have one more NBFC, IL&FS, Infrastructure Leasing and Financial Services, specialized in infrastructure loans. So argument is simple here. Banks are not specialized in one sector to give loans. Whereas in NBFCs, we can have different NBFCs who are experts, who are involved in only one sector like this. Right? That is one more reason why NBFCs are very important. And finally, NBFCs will provide loans to purchase tractors, to construct roads, for companies, etc., etc., etc. Will they add to the demand in the market? Will they help in higher production of goods and services? Will they contribute to the growth, etc.? Answer is yes. Answer is simply yes. So these are the reasons why we say, despite having banking sector, despite having such a huge presence of banking sector, NBFCs are even today relevant in India. But having said so, even NBFCs are facing issues. Right? Even NBFCs are facing a lot of problems now. What are these problems? One, asset liability mismatch. All of you will agree? Asset liability mismatch. Right? Any NBFC which takes a deposit of, let's say, 3 years or 5 years will give a loan of, let's say, 8 years, asset liability mismatch automatically will fall on it. Right? So one problem is asset liability mismatch. Second problem is NPA, because they are involved in the lending activities. Many of these are involved in lending activities. Lending means problem of NPA automatically will be there. Third one, thanks to pandemic, the amount of money that the NBFCs were able to collect has been hit. Right? Thanks to pandemic, amount of money or amount of funding, right, they are able to raise, it has been affected, because during pandemic, right, people were concerned, people kept the money in the deposits, that is a bank account. They wanted to issue, right, let's say more loans, but the funding activity was affected. And finally, the credit issuance also has a slowdown because of the pandemic. Right, so these are some of the concerns or the issues related to functioning of, right, the NBFCs, non-banking financial companies. Done? Now, let me ask you a very simple question. Here is an NBFC. Here is an NBFC which will collect deposits from you and is involved in lending activity. Right? Any example? Many of these NBFCs are, for example, Reliance Money, Bajaj Capital, TVS Capital or TVS Credit, etc. They issue term deposits. They collect term deposits and use it to finance their activities, that is their lending activity. Which means they are collecting deposits of the people. Don't you think the regulation should be more strict on these types of institutions? Right? RBI simply says these NBFCs are collecting funds just like a bank. But for bank, we have very tight regulations. We have capital adequacy ratio. We have concentration limits. Right? There's a term called as concentration norm or concentration limit. For example, how many of you think, let's say a bank which has collected, let's say deposit of 100 crore should be allowed to issue the 100 crore rupee in the form of loan to only one company? Let me see. A bank has collected 100 crore rupee deposits. That's the only deposit that the bank has collected. Do you think it is a correct practice to allow this bank to give all this 100 crore rupee in the form of loan to only one company? You should never allow it to happen. You should never allow this to happen. Why? Because you have given loan to only one company. What if this company incurs a loss, is shut down? Don't you think there is, I'll use a term now, concentration risk? Is it okay? Can you understand the point now? There is a concentration risk here. That's the reason what RBI has done is, on different banks like this, there are limits, right? Concentration limits. To only one borrower, how much loans you are allowed to issue. Right? There are a lot of regulations like this which RBI has imposed on banking sector. Now RBI says, why should I leave NBFCs then? To improve the health of the banking sector, to regulate banking sector, I've imposed a lot of these conditions on a banking sector. Even NBFCs are collecting deposits of the people, customers. Why should I not impose similar restrictions on NBFCs? That is the reason now in case of NBFCs, a new system has been proposed and implemented by RBI. A scale-based regulation system. A scale-based regulation system. Now in the scale-based regulation system, what RBI has done is, it has divided the NBFCs into 4 categories. Have a look at this. It has divided the NBFCs into 4 categories. And if I arrange them, the arrangement will be done like this. A pyramidal structure. If I arrange these NBFCs, it will be arranged in the pyramidal structure like this. Right? Just give me a second. I will show it. I will number it 1, 2, 3 and 4. And right, look at the table here. Look at the table here. I will number base layer as 1, middle layer as 2, upper layer as 3, fourth, right, as a top layer. In a pyramidal representation, it will be like this. That is, the base layer will be the bottom part. The upper layer, the top layer will be the top. I've written it reverse. My mistake. I've written it reverse. Let me correct it. I've written it ulta, right? Reverse. So it will be 1. It will be 1. It will be 2. It will be 3. It will be 4. Perfect sense now. Right? Fourth will be the base layer. Right? Top layer will be the first one. Now, do not worry about the table. Look at the pyramid and tell me. Look at the pyramid and tell me, where do you think most of the NBFCs will fall? I hope you understand. right? Where do you think most of the NBFCs will fall? All of you will agree, sir, base of the pyramid is very large. Base of the pyramid is very large, right? Hence, we think that most of the NBFCs will fall here. You're absolutely right. You're absolutely right. Most of the NBFCs, there are more than 9,000 NBFCs in India. Do not remember the number. From 1 year to next year, it will change. Trust me when I say this, it will change. So there are more than 9,000 NBFCs in India. Most of them will be kept in the base layer. Most of them will be kept in the base layer. And certain regulations have been implemented now. For example, how do you classify NPAs has been changed for NBFCs. Right, so understand this. As you keep on moving from the base layer to the top layer, right, the classification of NBFCs will become stringent. The capital adequacy ratio requirements will become very strict. Concentration limits will be imposed on their activity, etc. So the fourth layer will be the base layer. Most of them, that is those NBFCs with an asset size of less than 1,000 crore rupees will be classified in the base layer. And when you move to the next one, that is a middle layer. Those NBFCs with an asset size of more than 1,000 crore rupees will be kept in the third layer, that is the middle layer. And now we have, let's say, certain NBFCs which are very, very large. Very, very large NBFCs. Let's say top 20 to 25 NBFCs in terms of their asset size. So on these, regulations should be much more strict. So what RBI says, they'll be kept under the layer 2, that is upper layer. And as of now, the first layer, that is the top layer, will be kept vacant. I hope you understand. The top layer will be kept vacant. No NBFCs will be classified in the top layer. But RBI says in the future, in the coming months or in the coming years, even with these regulations, I'm not able to contain the problem in the NBFCs. Even after such regulations, NBFCs are incurring losses. They are closing down. The deposits of the people are at risk. Then I will shift some of these NBFCs into the top layer and have much higher regulation on it. This is how the scale-based regulatory system has been introduced by RBI to bring parity in terms of regulation between the banking sector as well as a non-banking sector. Is it okay? Right? In order to regulate the NBFCs in a much higher level, to bring these regulations at par with the banking sector, now RBI has implemented a scale-based regulation even on the NBFCs. Okay? So this is the latest current affairs regarding NBFCs. Done? Right, so this is a discussion regarding banking sector. Now next one is the questions discussion, previous year questions. But before that, any issue, please do let me know. Any issue? Concern of NBFC, funding. They have not been able to collect a lot of funds because of the pandemic. The loans have been given, NPAs have increased. They are also facing asset liability mismanagement because they have collected, let's say, a term deposit of 3 years, but they have given a loan of, let's say, 5 years, right? So asset liability mismatch is also a problem for all of them. Okay. Can you again explain who regulates NBFCs? As per the document, it is RBI. It is Reserve Bank of India which will regulate NBFCs. But RBI says, right, we should not have a same regulation, right? I cannot regulate all these NBFCs. There are different agencies such as, right, Insurance Regulatory Development Authority, SEBI, Securities Exchange Board of India, Pension Fund Regulatory Development Authority, etc., which should be allowed to regulate them. But if these are deposit taking, I will regulate them. Okay. What is the top layer? I'll repeat it again. What RBI has done is, it has divided the NBFCs based on asset sizes. Simple. How much assets are there with NBFCs? Divided. If there is an NBFC which has an asset of less than 1,000 crore, keep it in the base layer. What if they have more than 1000 crore? Put it in the the middle layer. Within that only, within these NBFCs, the top 20 to 25 NBFCs in terms of asset size, put it in the upper layer. And right now, do not keep anything in the top layer. What is the importance of classifying like this? As you keep on moving from the bottom to the top, the regulations imposed by RBI will keep on increasing. Regulation imposed by RBI will keep on increasing. And RBI says, as of now, the top layer will be vacant and we have around 20 to 25 in the upper layer. But even after these many regulations, imagine NBFCs will continue to incur losses. Now I will shift some of them into the top layer and I will increase the regulations on these NBFCs. Right? That is what RBI says in terms of, let's say, classification of these NBFCs based on the scale. Okay? Any more difficulty? Example of NBFC, right? I told you many examples. Muthoot Finance, right? Muthoot Finance, right? Manappuram Gold, right? Let's say India Bulls, IL&FS, all of them are examples of NBFCs. And there are more than 9,000. More than 9,000 NBFCs, right? Okay. Now, let's solve the questions. Then let's solve the questions here. Okay, so 60% have answered correctly. Why? Money multiplier in an economy increases with which of the following? Increase in the CRR, increase in the SLR. Do you think if CRR, SLR increases, money multiplier will increase? No. It's a basic idea. We have discussed this yesterday also. If CRR, SLR increases, liquidity in the banking sector will come down. If the liquidity comes down, right, the fractional reserve system will create lot of loans. No, it will create lesser loans. Increase in the banking habit of the people. What do you mean by increase in the banking habit? People will deposit more and more money. More people will deposit money. People will take loans from the banks. Will it not lead to higher money multiplier? Answer is yes, by the way. Okay. Increase in the population of the country. You tell me. Just because the population increases, does it guarantee necessarily that the money multiplier will increase? No. D is wrong. C is correct. C is correct. Okay. %34% have answered correctly. Why? In India, the central bank functions as a lender of last resort. What do you mean by lender of last resort? We have discussed this yesterday, by the way. If you ask me, sir, where you have discussed? You have not discussed. Please check the PPT. There is one slide where I've written lender of last resort. That is in the slide where we discuss the functions of RBI as a banker to banks. I said RBI is a banker to bank. It is also a regulator of the banking sector. But in addition to this, RBI is also referred to as a bank of last resort Because any bank which is facing emergency, which requires money, right? There is a crisis, it requires money, they can always approach RBI and borrow from RBI. And because the banks are allowed to borrow from RBI at any emergency situation, RBI is referred to as a bank of last resort, lender of last resort, right? So lending to trade and industry bodies when they fail to borrow from other sources, right? Straightforward, no. Straightforward, it's wrong, right? Second one, providing liquidity to the banks having temporary crisis, yes. Third one, lending to governments to finance budgetary deficit, no. Right? Government financing is not part of last resort. I hope you understand. Why not option one? Anywhere have you seen RBI giving loan to industries? Let me know. Sir, why not one is correct? You tell me, anywhere have you seen RBI giving loans to industries? Or I telling you, RBI will give loan to industry. Then how can you ask me, sir, why one is not correct? RBI doesn't give loan to companies. It should be pretty much evident now. It never will directly deal with companies like this. Never ever. Okay, lending to government to finance budgetary deficit. Right? In certain situations, RBI is allowed to provide loans to government. We do not follow it now. It's allowed. But it is not the reason why RBI is referred to as a lender of last resort. That will basically become lender to banks. I'm sorry, lender to the government, banker to the government, not the lender of last resort. So third is wrong. Second one is correct. Right option is option B. Right option is option B. Okay, providing liquidity to the banks for temporary crisis. Next one. Consider the following statements. Let's start. Okay, 45% of answer correctly. Why? Right? Let me use the elimination method here. Right? Try it. Right? With practice, you will get all these. Certain provisions of the Constitution of India give the central government the right to issue directions to RBI in public interest. How many of you think, see, these kind of provisions are there in Constitution of India? Let me know. How many of you think that there are provisions regarding RBI's functioning in the Constitution of India? I'm focused on this because specifically I told you only the term RBI is mentioned, nothing else is mentioned in the Constitution of India. Everything comes from RBI Act. Right? I've told you. So second one is wrong. Second one is wrong. Can you use elimination method? Can you use elimination method and get the answer? Right? But anyways, Governor of Reserve Bank of India is appointed by the central government. Statement 1 is correct. Governor of RBI draws his powers from the RBI Act. Third statement is also correct. The function of RBI, structure of RBI, everything comes from RBI Act. So that there is no provision in the Constitution. Please understand, there is no provision in the Constitution of India regarding functioning of RBI. The only mention regarding RBI in the Constitution is where the powers are distributed between center and state. Remember, polity classes, Schedule 7, central list, state list, concurrent list, etc., etc. So you tell me RBI is owned by the central government. In which type of the list it will fall? Of course, it will fall under the central list. Okay, right? That is a union list. Right? So argument is simple. Right? Do not assume that everything is there in the Constitution of India. Okay. Now, next. Okay, 43% have answered correctly, but why it should have been higher? Can we use elimination method again? Try it. That's the reason I keep on telling you people, try it. Only then you will understand it. Can we use elimination method? How? Let's start with the first statement. They are supervised and regulated by local boards set up by state bank or state governments. Is it correct? The urban cooperative banks will come under regulation of what now? Reserve Bank of India. RBI, Reserve Bank of India. Banking Regulation Amendment Act of 2020. We have discussed this today itself. Right, so first statement is wrong. Part of the administration, election, etc. will come under the state government. But the banking activity will not come under the state government. It should not come under the state government. It should come under the RBI, Reserve Bank of India. So one is wrong. Can you use this to eliminate? Can you use this to eliminate the options? Yes. And anyways, they are allowed to issue equity shares and preference shares. I have not discussed what you mean by equity shares, but I have not discussed preference shares. I know that. Don't correct me. I know that. I will discuss it when I take a financial market. But tell me, are they allowed to issue shares or not? Did we discuss this point at least? Are they allowed to issue shares and bonds? Answer is yes. With amendment to the, some of you are saying no. Please check the PPT. I've written in the PPT. Not even written like this. It is typed in the PPT. It is there. Banking Regulation Amendment Act reform. It is there. They are allowed to issue bonds and shares. Second statement is correct. Right. Third one. They were brought under the purview of Banking Regulation Act 1949 through an amendment in 66. Even this point also is there. Those which had a paid up capital of more than 1 lakh rupees were brought under Banking Regulation Act. Right. So 2 and 3 are correct. Right option is option B, 2 and 3. Okay. Next. Try elimination method. Try it. You'll be surprised to know many of the times you could have solved these questions using elimination, despite whether you know all the points or only 1 point, etc. 60% have answered correctly. Why? Why? 1 is present in 3 options. Try it, Baba. Try it once. 1 is present in 3 options. Look at 1. Buy government securities. To combat demand side inflation, which of the following activities would be preferred by RBI? Look at the first one. Buy government securities. You tell me, if you want to control demand side inflation, should you increase money supply or decrease money supply? Should you increase the money supply or decrease the money supply? Decrease money supply. If you purchase government securities, are you going to increase or decrease money supply? Will you not increase money supply? I hope you understand this. All of this we have discussed, applied now. You will purchase government securities. By purchasing government securities, will you reduce money supply? No, you will increase money supply. If you increase money supply, can you control inflation? No. So 1 is wrong. Can I use elimination method here? Can I use elimination method here? Right? Again, yes. That's the reason I keep on telling students, try it. Try it. Many of the times students come out of the examination hall saying that question paper, especially economy, was very, very difficult. Very, very difficult. That fellow taught about this, but there was one statement which was not covered in the classroom. Please look at the statement. Try elimination method. Automatically you could get the answer. Okay. Increase the repo rate. Of course, yes. It will make the loans very, very costly. Right. Hence, you will help in controlling inflation. Print more currency. If RBI is printing more currency and supplying it, will it not cause inflation? Wrong. Decrease SLR. If RBI decreases SLR, I hope you understand. If RBI decreases SLR, what will happen? What will happen to the money supply? Liquidity. Liquidity increases. Money supply increases. So it will cause inflation. So fourth one is also wrong. Right? Some of you are saying, but printing money doesn't mean increasing money. Right? No, not generally. Printing more currency means it is assumed that it is used for issuing currency only. Right? So that's the reason. And anyways, let's assume you're right. You're saying, sir, printing means is not equal to distribution. Show me the combination of 2 and 3. Please check. Is there a combination of 2 and 3 in the options given? No. So again, even if it is given, I will say it will not be correct. Because RBI doesn't print money to keep with itself. Right? I hope you understand. It doesn't make any logical sense. Right? If you're RBI governor, you will print, let's say, 2,000 rupee currency note for what? Just for keeping with yourself. You tell me. Right? Is that how RBI will work? Right? No. RBI prints currency means for issuance purposes. Okay, so the right option for the question will be option B here. Next one. Okay, 37% have answered correctly. In the context of Indian economy, which of the following is or are the purpose or purposes of statutory reserve requirements? There are 2 statutory reserve requirements. One is CRR, another one is SLR. Tell me, what is the purpose of CRR and SLR? Why does RBI have statutory reserve requirements? One, to control how much credit will be created. All of you agree? To control how much credit will be created. That is one. Second, I told you, if a bank doesn't have any statutory requirement, it will collect 100 crore rupee deposit, give it as a loan. Are we not taking a higher risk by allowing the bank to do that? Right? So RBI says maintain SLR, maintain CRR. Right? Some of the deposits you will keep it in the form of safety. That is 1 and 2. So can you use elimination methodology? Of course, yes, you can use elimination methodology. Okay. Right. So 1 and 2 are correct. Can RBI prevent commercial banks from making excessive profits? No, that is not the role of RBI. To force the banks to have sufficient vault cash to meet their day-to-day requirements, that will come under different requirements and not here. Okay, so 3 and 4 are wrong. Right option for the question is option B, 1 and 2 only. Okay. Let me check whether I've given a wrong option or not, because I've given option A, 20% of you have ticked it. but 56% have ticked option C. Let's see. Okay, which of the following measures would result in increase in the money supply? Purchase of government securities from the public by central bank. Will it increase money supply? Of course, yes. I hope you understand. Right? It will of course increase the money supply. Okay. Deposit of currency in commercial banks by the public. How many of you think second statement will increase money supply? I repeat, how many of you think second statement will increase money supply? Answer is no. It will not increase money supply. Some of you will be confused. Do you remember M3? We have discussed this. M3 consists of what? M1 plus term deposit. M1 plus term deposit. And if I want to basically dissect it further, M1 will consist of cash held by the public plus demand deposits with the banking sector plus term deposits with the banking sector. Now let's take a simple example. Imagine we have a cash of 500, demand deposits are worth 1,000 rupees, term deposits are worth 2,000 rupees. Now how much is the total M3? You tell me how much is the total M3 here? M3 will be equal to 3,500 rupees. Now imagine you have taken this cash 500, you will deposit in the demand deposit. Take a simple number. You have taken this cash of 500 and you have deposited that with the bank now. The demand deposit now will change, will become 1,500. What about term deposit? 2,000 rupees. How much is the M3? M3 will remain the same, 3,500. So always remember this. When a customer will keep the deposit, the cash will be taken, will keep the deposit or withdraw the deposit from the bank, money supply doesn't change. Right? So second statement, wrong. Borrowing by the government from the central bank, yes, it will increase money supply. So my mistake. I think I've given only option A, right, as a correct answer. My mistake. Option A is wrong. Option C is the right one. Again, right, option C is the right one. Right, my mistake. Right, I've given only one as the right one. Okay. Sale of government securities to the public by the central bank. It will increase money supply. If central banks will purchase government securities, money supply will increase. Right, that will sale of government securities. If central bank will sell, right, money supply will decrease. Right, so fourth one is wrong, third one is correct, first one is correct. How point 3 is correct? If government of India will borrow from RBI, you tell me, will the money supply change or not? RBI, right, let's say here is RBI, government of India will borrow from RBI. Right, and there are many ways. For example, I hope remember ways and means advances. WMA, do you remember or not? WMA or monetization of the deficit, etc. So if government of India will borrow from RBI, you tell me, will the money supply change or not? Of course, yes, money supply will increase. Right, so third one is correct, first one is correct. Right option will be option C, 1 and 3 only. And the previous question, some of you are asking how 3 is wrong. You tell me, have I discussed anywhere where RBI is preventing banks from making profits? I hope you understand, it is not the function. Right? Don't ask me why is not RBI doing it. RBI will never do it. Right? Have I discussed any function of RBI where you can say RBI is preventing banks from making profits? Any example? I hope you understand. Any example? Absolutely no. Right, sir, what about SLR then? My dear, SLR, CRR are done in order to ensure that there is safety. Right, the banks are not taking excessive risk in the market. That's a reason. Okay. Right, to force the banks to have sufficient vault cash. Do you think CRR and SLR kept in the form of cash? Now some of you are asking, what about point number 4? How many of you think CRR and SLR is kept in the form of vault cash? No, my dear, no. Right? No, that is wrong. Okay. Now, can we solve this like this rather than starting poll, taking time, etc.? Because you already know the answer. Let's solve it. If you withdraw 1 lakh rupees in cash from your demand deposit account at your bank, the immediate effect on the aggregate money supply in the economy will be to reduce the money supply by 1 lakh rupees. How many of you think money supply will come down by 1 lakh rupees? Sir, right, how is that possible? Just now we have discussed this. M3, right? Take the example of M3, right? To reduce the money supply by 1 lakh? No. To increase the money supply by 1 lakh? No. To increase it by more than 1 lakh? No. To leave the money supply unchanged? Yes. Option D is the right one. Option D is the right one. Money supply will not change. Money supply will not change. But sir, money multiplier is there. Please look at the question. Please look at the question carefully once again. Please look at the question carefully once again. Right? If let's say term deposit is withdrawn, 2000 rupees withdrawn, the cash will increase to 2500. The demand deposit will remain 1000 rupees. What is the money supply? What is the money supply? M3 will still remain same, unchanged. It will leave the money supply unchanged. Okay. Next one. Okay, 59% have answered correctly. What is or are the facility or facilities the beneficiaries can get from the services of business correspondent or bank sati in branchless areas? It will enable the beneficiaries to draw means draw their subsidies and social security benefits in their villages. Yes or no? I've explained, right? I've put even a very bad picture of micro ATM, right? I've shown you the thumbprint, etc., etc. Will it not help you to withdraw, let's say, pension that you have received? Will it help you to withdraw, let's say, LPG subsidy that you have received? Answer is yes. It will enable the beneficiaries in the rural areas to make deposits as well as withdrawals. Of course, yes. Second statement is also correct. Right option will be option C, both 1 and 2. Next one. Okay. Arey, why? 63% have answered correctly. Why? Can you use elimination method? Right? We can use it, of course. Which of the following steps are used for contractionary monetary policy? Sir, you did not use the term contractionary. Right? First, I believe in the first or second class, I told you about contractionary and expansionary. What is the context? Did we discuss counter-cyclical policy and pro-cyclical policy? Counter-cyclical and pro-cyclical. There we use the term contractionary and expansionary. What do you mean by contractionary monetary policy? Where the money supply will be reduced. Simple. Where the money supply will be reduced. Can you use elimination method? Right? Try it. Decreasing SLR. If you reduce SLR, is it a contractionary monetary policy? No, it is becoming part of expansionary monetary policy. So can you use elimination method to get the answer? Of course, yes. But anyways, increase CRR. Will it not reduce money supply in the economy? Yes. Increase repo rate. Again reduces money supply. Right? So 1 and 2 are correct. Right option for the question will be option B here. Okay. Next. Use the elimination method. Try the elimination method. You generally get the answers very quickly with elimination methods. Okay, 42% have answered correctly. Why? Or you have not read the question very carefully then. If RBI decides to adopt an expansionist monetary policy, which of the following RBI will not do? Read the question very carefully. If RBI decides to adopt an expansionist monetary policy, which of the following RBI will not do? Meaning what? If RBI wants to increase money supply, which of the following RBI will not do? That is what the question is asking you. Cut and optimize the SLR. RBI will use this to increase money supply, right? So yes, the RBI will use this. Increase MSF. You tell me. If the MSF rate increases, will the money supply increase or decrease? Money supply will decrease. So is it expansionist? No, it is contractionary. What about cutting the bank rate and repo rate? Expansionist. So 1 and 3 are expansionist. But is the question asking you which of the following are expansionist? No, question is asking you which of the following is actually contractionary. I hope you understand. Right? So please read the questions very, very carefully, because more than 42% have answered correctly. 44% did not read the question correctly, although it is easy. I hope you understand. This question is easy. It's not difficult. You did not read the question correctly. Hence, congrats. You did not only lose 2 marks, you also lost 0.66 more marks. Right? Negative marking. Right? So please be very careful. And this 2.66 is very important for you. Okay. So second one is right, the tool that RBI will not use. Right option will be option B here. 2 will not be used. Okay. So these are the various questions related to banking. I hope you understand now. Again, sir, any mains question? Absolutely no. In the mains exam, no question from this chapter has appeared. But in the prelims, lot of questions have appeared. And I'm pretty sure looking at these questions, now you will realize, okay, some questions are straightforward, some questions are tricky, some questions are analytical. In many of these questions, you can use elimination and get the answers. Okay. So if you have any kind of questions or queries, let me know. Let's solve this and let me stop the discussion after that. But Government of India will borrow by issuing securities, by indirect monetization. How will the money supply be affected? Please read the question carefully. The question says Government of India borrowing from RBI. I hope you understand. Please read the question carefully. Government of India borrowing from RBI. Government is not borrowing from the people. If government will borrow from the people, that's a different issue altogether. Government is borrowing from RBI. That's a direct monetization, by the way. Right? So direct monetization will increase the money supply. It will not reduce money supply. Okay. Nowadays, SBI giving license to open mini bank to overcome crowd in their premises, so it will count under SFB or payment bank. I don't know what you mean by mini bank. I have not come across mini bank, right? So please do let me know, where did you come across a mini bank? What if private sector bank is given autonomy? It will impose high interest on public that leads to economic fluctuations. Again, when I say give autonomy, it doesn't mean that don't hold them accountable. It simply means that intervention of RBI, intervention of government should be minimized. When you say autonomy, it doesn't mean that it will work independently without any regulations. Absolutely no. Okay. Sir, you had said NARCL will give money to banks that if they promise to give 20 crore for the asset selling, but if NARCL sell it only at 10 crore, remaining 10 crore will be given from contingency asset given by Government of India. My doubt is that why should NARCL should promise the bank and give 10 crore asset money? Argument is simple. Before you sell the asset, you need to arrive at certain value. I hope you understand. Before NARCL sells the asset, they need to evaluate. They need to find out what is the value of the asset. Right? They will estimate the value and they will offer this much amount I will give you. But in reality, what could happen is when they take the asset and try to sell it in the market, they may or may not get that 20 crore rupees. That is where the difficulty will arise. Okay. So who will regulate scheduled commercial banks? Scheduled commercial banks will be regulated by RBI. RBI will regulate scheduled as well as non-scheduled. It's only that the facilities which are provided to scheduled commercial banks, the facilities will not be provided to non-scheduled commercial banks. That's a basic idea. Okay. Okay, done. How does government finance their deficit? Have patience. Tomorrow we'll discuss fiscal policy budgeting. Tomorrow we'll discuss this. How does government deficit the finance? What are the different methodologies, etc., etc.? Don't worry, we'll discuss it. Right? So tomorrow we have a class, by the way, so we'll discuss this. Don't worry. Do we need to prepare this unit for mains? Strictly speaking, understand this. The trend of UPSC has been that they have not asked any question on mains from the chapter. But having said so, I have not strictly discussed what is banking in the chapter of banking. For example, if you open the chapter of banking in any book, they do not discuss insolvency and bankruptcy code within banking. Right? But I've inserted the concept of IBC within banking because there is this idea of a NPA. Right? So that's a reason I would recommend do not try to differentiate it like this. What if next year UPSC will decide, let's throw a bomb at the students. Let's throw a googly at the student because they have analyzed and every faculty has told them from banking no question has come in the last 5 years in the mains. What if UPSC will use it and give you a question on mains in banking sector? Then you'll come out of the examination all cursing me, right? Saying all the things about me. So my recommendation is do not try to do that. And prepare it. Anyways, you're preparing for prelims, prepare it thoroughly. Okay? Done. Right, sir. Done. Let's stop the discussion here today. Right. So we'll continue with the discussion tomorrow. Tomorrow, by the way, many of you are asking, sir, where is the PPT? It is already there in the PPT. Please use it. Tomorrow we will start the discussion on budgeting as well as a finance commission. The concept of budget as well as finance commission, we'll take it up tomorrow. Done. So thank you. Have a great day. Right. Enjoy the festival. Take care. Read well. Read well. Okay. Done. See you tomorrow. Have a good day.